Yes, it's red. Okay, you got
Yeah,
it.
yeah,
All right,
this session
so
is being recorded.
before I go any further, everybody sees the S&P chart, right?
Yep.
Yes.
That's good to go. Now I'm just going to clean up a few things. I keep a few of these annotations in here. It helps speed things up. Okay. All right. Good to go? Everybody here okay?
Yep.
All right. So just so you know, can you guys hear each other here when they talk?
Yep.
You can?
Yes.
All right.
In
So
GoToMeeting, we can.
we've got, and I told Dennis this, that Dennis is a member of ours. He's in Ottawa, right, Dennis?
That's right.
And then we've got Robin and James on here, and Noah is, I believe, Matt.
N-
Is that Matt?
Noah, I think, is
Well, I'm the host, so I'm the organizer, Matthew Fraley, okay.
right.
I don't know.
Noah is somebody that I trade with.
Oh, okay.
I mean, Noah and I are good friends, so
Oh, okay, so he's on here listening as well?
maybe, yeah, maybe Matt invited Noah. Noah, why don't you say something? You're not talking. We can't hear you. Let me give Noah a bad time.
Is he there?
He's logged on. Let
He
me
may not
send
have
him
his
a-
audio set up, or he may have just stepped away for a second. But
Okay.
it's got to be Matt. I mean, no one else had the URL.
Yeah, nobody else has it, Robin. Didn't you give Matt, that's got to be Matt.
Yeah, I would assume it is.
He's on his laptop. All right, anyway, we're going to move
Okay.
on. All right? So to begin with, and this goes real quick, I just want to show you some of the settings that I have, and this is a daily S&P chart. This so happens to be late 2011 into 2012. It doesn't matter really what time I'm going to look at. I'll shift to another time, but this provides several good examples of triggers, setups, and it's even a little more difficult under this time, so I like to use this situation as a part of the tutorial, okay? All right, so everybody
Okay.
still here is all right, good, right?
Yep.
All right, so we're going to
Yep.
move on and get going. And on top, guys, I've just got and I'm going to talk about the indicators first. I've got an RSI 14. As everybody knows, that's the default. I didn't even ask you, Dennis, how long have you been looking at technicals?
Oh, years.
All right, so this stuff is commonplace to you, right? No
I've seen it
surprises,
all.
right?
Yeah.
All right.
Yeah.
And then above, and I want you to note this, Dennis, okay? I want you to employ the RSI 5 on your charts from now on. It's in brown above,
Yep.
RSI 5. It's going to give clearer signals and faster oscillations on the daily time frame. And I encourage you to use it in terms of time frame 60 minutes and above. 60 minutes and above.
60
So
minutes and above.
60-minute, 2-hour, 4-hour, daily, weekly, monthly.
Okay.
All right. It will actually give me some oscillations and clues that won't be seen on the RSI 14. One thing you're going to learn is I focus in on price, price, price. Price is king. These are just guides like a moving average. That's all they are. Okay?
Yep.
All right, so RSI 14, RSI 5 above. Below I've got volume, and I've got just a standard MACD and stochastic, slow stochastic. You'll see during this entire presentation I won't even look at them. That's how, I don't need them, okay? But they're there if you want to look for multiple points of divergences or anything that they'll be there. Maybe I'll glance at them, but again, the patterns and my triggers tell me everything, and the last time I looked at my statement, it doesn't go off RSI, MACD, or stochastic. It goes off a price, right? So price is king, and all indicators follow price. They don't lead, none predict. They just tell us when there might be a stronger likelihood of reversal, but divergence by itself doesn't mean price has to go up or down, right?
Yep.
We've seen divergences on the S&P weekly for frickin' 7 months, 8 months, 9 months. And we're getting new highs, right? So again, I just want to re-emphasize that. So in this tutorial, I'll start out with some broader observations, and then we'll move into the funner stuff, the triggers. All right, so any
You need to
questions?
be used in reverse divergence.
Pardon? Yeah,
You need to be using hidden divergence.
yeah, exactly. And then the price chart is what I'm going to move on to now. So no questions on just the oscillators, right, guys?
Nope. Nope.
All right, so in the price, I like that we got people who know what's going on. I've got a Bollinger Band behind the chart. You see the faded brown a little bit, guys?
Yep.
One thing you'll notice is when price gets at extremes, and the S&P is prone to reversing at extremes. It likes to get extreme, especially on the sell side. It likes to really capitulate with big red candles and volume and get outside that lower Bollinger Band before snapping back. Topping's more of a process. It usually comes about on a wedge, something like that. So to get back to the chart itself, we're going to be looking at the Bollinger Band and then 4 moving averages. Initially, I've got a 9 in pink, and that's an exponential. Then I've got the 20 simple, which is in blue. Why do I use the simple? Because it keeps the chart cleaner. It's the middle Bollinger Band, okay? And then finally, I've got the red simple and the 200. These will barely ever come into play. What's going to the 200 will barely ever come into play. What they're there for is just simple targets or guides where we get reversal. Why? Because a lot of traders respect those areas, and we typically get some action off of them. Okay? So pretty straightforward. All right. Now, before I go any further, what I want to talk about in just generality, I'm going to get rid of some of this stuff and really clean this up. The moving average. Yes, go ahead.
Steve, just to make sure your Bollinger Band setting is at a 20 and a 2, or?
Yeah, just their standard 2 standard deviations.
Okay.
Okay.
All right. Thanks.
Yep. Anytime you have a question, you guys ask. Do not hesitate. All right. So one of the things you're going to see is for a nice trend to occur, these moving averages, the 9, 20, and 50, and in particular the 20 and 50, are going to align themselves as such that they're going to be stacked 9, 20, and 50 in a bull trend. You see this from here to here?
Yep.
I've got the pink above the blue, above the red, right? And that's a heck of a trend. That happened to be a 200-point move on the S&P. Nice move, right? Okay. And over here, when I start going down, I finally get a cross of these moving averages. Usually when the moving averages realign and start asserting themselves, we start to get a stronger move. And that's why at bottoms and tops, it takes a while to dissipate the momentum. So here I've got downside momentum. Here I've got upside momentum. They don't just roll over and crash unless we have some big news event. It takes time to turn these markets like a barge. Bottoms can be a little more sudden, especially after coming off an elongated wedge, but tops are more of a process. So one of the things that I talk about, Dennis, is I'm looking to trade bottoms and tops, but I'm looking for my swing or longer term plays to come off of an initial higher low or an initial lower high. So let's look at this briefly. Here's our capitulatory bottom, and it's easy in hindsight to see this back in October of 2011. That was a lower low. You see this? You don't have to know the exact price. Don't worry about that. Okay? And then we get a subsequent higher low here, right? See where I'm shaking it, guys?
Absolutely.
Okay. This sets up, okay, to me, the start of a longer term swing or an easier entry because it's done the hard lifting of getting up above these moving average and start breaking some of the downside momentum. The opposite is here. Here I've got a high, and then I get a lower high here. You see these two highs?
Yep.
Okay. And usually it's going to be that third leg, which we call a C or third wave, that's more elongated than the first leg. So the first leg dropped this distance, and this one dropped a lot further, didn't it?
Yep.
So if we look over here, we've got a top, and then we get a lower high here. All right? And I'm going to tell you how to identify ahead of time, and I can do it pretty reliably when I'm going to get a lower high. You'll be amazed. All right, so I've got a top, and then I get a lower high, and you can see that next lower high after the moving averages start realigning is a lot stronger. So just in simplistic terms, when I'm looking for swing trades or longer term trades, I'm looking for a lower high or a higher low, and I'm looking for the initial one. And again, that doesn't mean I'm looking for just a little pullback. This is still within one uptrend, but a spaced out higher low or lower high. Got it?
Okay.
Nothing. No, this is just general stuff, guys. Nothing rocket science. No rocket science there. All right. Now, when I'm looking for, and we're going to do this lesson off of a bottom to begin with, and then we'll go through it and talk about potential continuation patterns until we reach a top, and then we'll reverse down to a bottom again. But when I'm looking for ideal entries, what I'm looking for is something nearer a bottom or nearer a top, and it doesn't matter what time frame you're trading on. The same thing goes for a tick chart. And what I'm really looking for to be established is, can I identify any type of pattern? All right? Can I identify a pattern? And again, at bottoms or tops, what type of pattern would I be looking for? I'd be looking for some type of reversal pattern, right, guys?
Yep.
And a common reversal pattern is a diagonal or a wedge, because those are ending patterns, ending diagonals, and as we're going down, we get a reversal, okay? Whereas, Dennis, so let me ask you, what's a common continuation pattern? Give me one.
Oh, common continuation pattern. Oh, gee.
By the way, if you want to,
Don't ask me.
if you guys ever want to know, watch this. I'm going to the website, right?
Yeah.
All right, the sticky charts above, you see this? I clicked on the link. Reversal patterns, continuation patterns, forget about these neutral patterns, okay? And they list several examples of continuation and reversal patterns. I think you should, Dennis, take that and print it out.
Yeah, I mean, you're right. I mean, the bullish channel, I mean, I just blanked flags. Yep.
So the most common one's a bull flag.
Yeah.
All right, that's a continuation, or a triangle. If I really narrowed things down, it would be a pennant, triangle, and flag. Those are your common continuation patterns. Your common reversal patterns are wedges, double tops. Those are your most common. Wedges often morph into inverse head and shoulders or head and shoulder top patterns. You actually get a wedge first that breaks down and then comes back up in the form of a rising wedge and forms a lower high, and that sets the right shoulder of a head and shoulder topping pattern, and you start to say to yourself, no wonder that first lower high is so much better, because it's usually associated with a type of pattern like that. And then you get a bigger move. I don't know if you guys were familiar, but almost all wedges end up forming into inverse or head and shoulders tops once they're completed. Not everyone, but the majority do. All right, so anyway, I'm back to my chart. So again, at bottoms and tops, besides getting into my proprietary stuff here, we're looking for patterns, because patterns provide evidence of many candles instead of just maybe a morning star, which is 3 candles, or for heaven's sake, like a hammer candlestick, which is 1 candle. The more candles you have, the more evidence you have, and the stronger your conviction can be, because it's many candles that are telling us what's going on. Everybody understand that? It makes sense?
Yes, absolutely.
All right, so in this particular example over here, and it happened to be, again, every time I leave and go on vacation, the market falls apart, okay? This was when I was in Colorado, okay? And this just so happened to be when we were arguing over the damn debt ceiling in July of 2011. Things got nervous, and this is when the S&P, I know it's hard to remember, but this is when the S&P was saying it was going to downgrade the U.S. debt. You guys remember that?
Yep.
Okay, all hell broke loose, and look at that waterfall decline, right? Okay, very, very sudden and sharp decline. All right, then we got a little bounce, okay, and I'll talk about that before making a higher low here. Now I'm going to get into some of the trigger things that I'm looking for, and I'm going to start out general. We're going to show you some examples, and it'll be repeated over and over and over again. And then I will be questioning you throughout. So pay attention. All right, so here, and by the way, what I'm looking for before I go any further is oversold conditions. And as you guys know, on the RSI, we're looking for, and I'm particularly looking at the RSI 5, I'm looking for oversold readings below 30, or in some cases on a smaller pullback near 30. And overbought, of course, above 70. Simple, right, guys?
Yeah.
Okay. And in the RSI 14, that doesn't tend to get oversold or overbought nearly as much. You can only see a few instances here in this year. So it's just another indicator we can look at. And normally when I'm getting oversold or divergences on the RSI 14, it may be representing a bigger trend change. But I'm not going to make a broad-based assumption. Again, I'm going to be focusing in on oversold and divergences in these indicators. Now, once I establish an oversold reading, it usually, and a lot of times it'll be associated with a move outside the lower or upper Bollinger Band. Clearly, down here, we really spike down, we get below the lower Bollinger Band. And up here, it's fractionally above. So these are what I call capitulation or exhilaration type candles. And one of the things that I've found in my work, Dennis, is that, and this is especially true on stock indexes, is you will get a lot of capitulatory candles that form big red solid candles. They may have small little wicks to them, but they're going to, in general, have a solid red body. Okay?
Okay.
And in tops, we're going to get the opposite, where we're going to get a big engulfing candle. And on stock charts here, they're going to appear as white candles or clear candles. Okay?
Okay.
Again, I'm going to go over more details. So at tops and bottoms, all right, these are some of the things that I'm starting to look at. And once I identify them, I'm going to use them as what I term a marker. Okay? And one thing I'm going to teach you is if the trend, the immediate trend, is going to continue in its current direction, it will not retrace 50% of a solid red or a solid white candle. This is an important concept. Okay? And it doesn't have to be just at tops or bottoms. I can use it as a trailing stop during a move in the middle, somewhere around the middle of the trend, okay? So, in other words, anytime I see a solid white or solid red candle, I can use that as a marker, and I will use it as a marker for a reversal trigger or a trailing stop, and you'll see that throughout this lesson. So I'm talking in generalities right now, and then I will implement this as we go throughout the lesson, okay?
Okay.
All right? So again, the simple concept is, keep in mind, roughly a 50% level on any solid candle. We'll do a quick scan. Here we see a red candle where I'm shaking it down here, right? Let's get rid of these trigger things for now. You see this big red candle down here?
Yep.
Okay, it's below the lower Bollinger Band. I'm oversold. Yes, I have some divergence. We'll come back to that. All right, over here, is it not true that I've got a pretty solid red candle right here?
Absolutely.
All right. Even here, I get a nice solid red candle, don't I? Okay?
Yeah.
Those are all markers. Here, I get a solid red candle. Okay?
Mhm.
And I can go on and on and on and go to different time frames. But these are going to be reversal markers potentially that I'm going to look at. At tops, here's a big white candle. Even this is a solid white candle here at the completion of a wedge. You see this up here?
Yeah.
It's a small white candle, but it's still solid and gives me a nice marker. Okay? Not every single time am I going to get at a reversal point that, but the majority of the time in my work, I will see that, and it doesn't have to be reversed the very next day and you're going to see that. It's a marker, and I can adjust that marker depending on the next candle somewhat. So again, as we go throughout this lesson, we're going to see that. But again, even here, I missed this one. Here's another little red candle right here. Okay?
Yeah.
All right? So that's that. And now let's get into the nuts and bolts.
Steve,
Yes, go ahead.
Steve, on that last little one that you pointed out, it's okay to like consider that one even though it wasn't at like the lower Bollinger Band?
That's exactly right, because in this,
Okay.
what you're going to see a lot of times after I get an initial higher low is this. So I've got a leg up, all right? And this
Right.
is where it comes into a little experience. Here's my bottom. Here's my first leg up. And you're going to learn, okay, already that I'm expecting a higher low here.
Right.
I literally have it. And I'm telling myself, this is a move A or B. This is a B pullback or a 2. And did I say A or B? I meant to say A or 1. B or 2, and I really should get another leg following this low that approximates this or exceeds it. Okay?
Yeah.
All right?
Okay, gotcha.
All right?
Yep.
So because this first leg has done so much of the heavy lifting, we unwind, okay, here. So we've got a larger 1 or 2 or B, and then we start subdividing, and these subdividing waves aren't going to reach those type of extremes. They're just not going to reach, but that's why this marker of the red candle is still good. If you look above, Robin, this is why I deploy an RSI 5. While this isn't reaching a lower Bollinger Band, it is approximating an oversold reading on the RSI 5 up here, isn't it?
Right,
Look,
gotcha.
all
Gotcha,
right.
sure enough.
So in simplistic
Yep.
in simplistic terms, for the great majority, I want to see this up into overbought territory for any consideration of a short, and this down towards oversold area for longs. Now, will there be some bull flags continuation patterns? Yes, but I'm talking about bottoming and topping patterns. This oscillator, it should be at or near those extreme levels on almost every occasion. You're not going to see that with the RSI 14. Okay?
Yeah.
It's
Right.
not going to give you clean signals there, and it may not even represent some divergence that we see on that RSI 5. And you're going to see why this indicator is so attractive. By the way, I forgot to mention, there's one little trick that I've learned, okay, and you guys should be aware of this. Out of these 3 primary indicators that I use, the RSI is the most responsive. It leads, followed by stochastics, followed by the MACD. Now, when the RSI is not leading the stochastics and the stochastics is leading, and let's say we're moving down and stochastics is ahead of the RSI, that tells me, okay, that it's a weak trend and it's bearish leading. There's another clue I'm giving you. If the RSI isn't leading and the stochastics is, it's telling us it's a false move likely.
Oh, really? That's interesting.
How many of you guys know that? I haven't
didn't
even
know that.
told Matt that.
Wait, if the RSI is not leading, in which one? The
The
MACD is?
MACD is a laggard. It moves slow. It's like the turtle and the hare in the race, okay? It's the turtle. So it's going to lag, but the stochastics, usually fires pretty good along with the RSI. And what I use, to be honest with you guys, when I look at this, is I use our proprietary BPT RSI. It's a 14, but it's an exponential 14. It approximates pretty good with the RSI 5.
Yeah, I was going to mention that, Steve. You know,
Okay.
it gets oversold easily.
Yep. So good to have you on there, Matt. But again, I'm just giving you guys a general observation. I don't need to know any of that if I teach you what these candles are going to do, okay? The less noise I have, the simplistic approach, the better it is.
Amen.
I don't want to look at 10 indicators. It's analysis by paralysis, okay?
Yep.
People,
Yeah.
and this is one of the problems I get from people is, well, I look at this, but the indicators are doing this. Take the indicators and flush them down the toilet, okay? Because then you'll finally feel confident about making a decision, and that's one of the biggest things about trading is to have the confidence in your signal and go for it when it gives it to you.
Yeah, Steve, one of a trading partner with Robin has an issue with that. He puts too many other indicators on Robin's charts, and then he's like paralyzed.
Yeah.
Just take them off, strip them down. So you guys are going to go ahead.
Yeah, I was going to say, and he looks at I've gotten him beyond it, you know, but he still uses too many indicators, but he also used to look at like a gazillion charts, and they all had to match up. Well, by the time everything matched up, trade's gone.
Yeah, exactly.
There's
Hell,
no trade.
if I waited for that even on the daily damn charts, they'd be gone.
Yep.
All right?
Yep.
And you're gonna see here, okay, that if we don't get in appropriately, even waiting for a stupid wedge break can be troublesome. I can get in before that wedge breaks in a very objective entry. Go ahead, Dennis. You had a question.
Yeah, on the stochastics leading to the downside over the RSI, what are the parameters you're using on stochastics? Are you using the
I'm just looking at the level. Just looking. So let's say, okay, stochastics is at 43 and RSI is at 60. That's leading down.
But with what stochastics are you using? 14 or 5.3?
I'm using the standard, okay.
Okay.
The default.
Okay.
Okay.
Good.
But again, that's just a little observation I'm giving you. Okay, this isn't part of the triggering thing here.
Okay.
You're going to see I don't even go below this page right here. So we're just going to focus in on this. That's it. I don't even need to look below. I'm barely ever going to look at volume either. All right. So let's look at this and say, oh my God, the world's coming apart. Things are just tumbling. Oh, by the way, before I go any further, you see this pink moving average, guys?
Yeah.
This 9-day moving average? If you
Yep.
just look throughout this entire year of trading, look and see how often price ever gets away from that pink line. It only does so at extremes, doesn't it? Like here or here or here. Otherwise, it's like a newborn with his mother. Doesn't like to get too far away from her chest, if you know what I mean. Okay?
Yeah.
You know, so when price is moving, you're going to normally see those candlesticks around that 9. Only on capitulatory selling does it get a fair distance. Is there a set percentage or anything? No. This is more of an art where you can say, oh my gosh, we're down here at 1100 and this is up at 1180. We're 80 points away from the 9? Is this where I want to be shorting? No. So keep this in mind because this is going to be the answer to some questions I give you. When price gets to extremes, one of two things is going to happen. It's going to snap back to the 9, or in a nice steady eddy trend, it's going to, if it gets a little too far ahead of the 9, it'll go sideways and wait for the 9 to catch up. In other words, it never likes to stay away from the 9 for too long. Okay? Here's a little trick. Here's a little trick. When price gets outside the Bollinger Bands and then it's a ways away from the 9, it's more often inclined to snap back to it. When it's not outside the Bollinger Bands, it may just drift back to it. And while it goes sideways, the 9 is actually moving to catch up to it. And if you guys see in a lot of daily charts, okay, you see these big moves and they'll pull back. What they're a lot of times waiting for is the 9 or in other cases the 20 to catch up. And it's like, I'm sitting here, I'm waiting for a push on my swing, and I'm going to wait until that 9 or 20 catches up, and then as soon as it catches up, it kicks it in the butt and sends it either up or down. Hits it in the butt, or if we're in a downtrend, it hits it on its head and knocks it back down. All right? So just a general observation, when price gets too far away from the 9, be on the lookout for some type of action that will take it back to it. If we get outside the lower Bollinger Band, it will likely take it back to the 20. By the way, someone's making a lot of noise. Okay?
Oh, sorry, that's
all right.
me.
Yep. So,
I'm muted.
all right. So here we go. One thing besides the 9, now if we get a close or if we get too far outside the Bollinger Band, not only will it want to go back to the 9, it'll want to go back to the midpoint, which is the 20-day moving average, the middle band. Okay?
Okay.
Got it? All right, so now let's get into the nitty-gritty and start talking about some examples off of what I consider a proprietary signal. So what I'm going to be looking for, okay, is in an oversold condition, a solid red candle. And once I see that, okay, I'm going to take advantage of it and start putting a marker in. Now, preferably, and I'm going to show you examples where we don't have a completed pattern and how it would still work out, and then I'm going to show you where we have a completed pattern. So let's just say we started this and we see something like this developing, and you just learned what I'm teaching you, okay, and this action is happening here in, we're about this point or so in 2011, okay? You didn't know it prior to that, all right? Okay, well, we came here to a bottom, we bounced up, came down, bounced up. By the way, we're going to talk about symmetry and measured moves a lot, Dennis. Look at this. Look at this move right here as my first bounce, right? You see how I'm shaking this?
Yeah, it looks like an ABC.
All right. Isn't it amazing how when I put it there off the B, it's almost a perfect ABC?
Yeah.
Nice little guide, okay. Now, I don't know how familiar you guys are with Elliott wave or something, but normally when you get your peak readings in your indicators, that's your wave 3, okay? It's not always the case, but normally, okay, your capitulatory wave 3 peaks out with your strongest momentum, and then you may get a lower low in price like you do here, but your indicators diverge. You see that?
Yeah.
Okay? All right, but anyway, let's take it one step further. We're going to start actually over here. We don't even have a pattern, do we? We've just got, it's fair to say this is a waterfall decline, right?
Yeah.
I can't draw in any damn wedge there. There's no wedge. That's just straight 90 degrees down, basically, right? All right?
Yeah, the only thing I see there is Thomas DeMark TD sequential 9 of 9 days down.
Yeah, that's one thing you can look at, okay?
Yeah.
But here, I'm going to make it simpler. I don't need to count all that. I see that finally, okay, here I'm dropping fast. And by the way, some of these candles are 80 points in a day. That's 10 times the normal range in the S&P. But here, even though we're dropping sharply, we're still not too far yet away from the 9 right here. But come this day, right here, right there, you see this big red candle right there?
Yeah.
When I close right there, you see where I'm moving this arrow?
Mm-hmm.
Right there?
Yeah.
Is it fair to say I'm a heck of a long ways away from the 9 now?
Huge.
I'm a huge. And if we look, we'll use this, and this is 1120, and this is up here at 1190. I'm 70 points away from it that day. Woo! We don't see that too often. Go back in history and look. But anyway, we don't know what's going to happen the next day. So block out what happens the next day, and let's assume we just saw that big red candle at the end of the day. What's important on a daily chart is the end of the day always. So we come home from work or we're done with our trading day and we go, oh my heavens, we close right at the low. We got a solid, unbelievable solid red candle, don't we, Dennis?
Absolutely.
Okay. All right. But you know what? Steve said if we're if we're down oversold, we're below the lower Bollinger Band, and especially if we're a good distance away from the 9, let's not just make assumptions that price has to keep going lower. Let's be prepared for a potential snapback in case that occurs. If it's going to continue immediately lower, I mean the next day, it shouldn't retrace 50% of this range. That candle range, as we said, was 1120 to the top of this candle is 1200. So 1160 is 50%. Got it? So, I'm going to put a marker right there. This is 50% of that entire red candle. Got it? You got it?
So it's not 50% of the red candle plus the tail at the other low at the low.
No, this hasn't happened yet, that candle.
Oh, of course not. What am I thinking?
Yeah. Let's remember, okay, we don't know what's going to happen the next day.
We only wish
at least I don't. I don't have a crystal ball. Some of our members do, but I don't.
Yeah, I've been polishing mine. I'm still working on it.
Robin's got a few in her class too. Okay, I'm sure. All right. So I might be okay, but I'm not that good. All right. So you got to get those gypsy tellers and those people in here. All right. So anyway, now guys, this is a waterfall decline. Okay. I've got no divergence. Usually what I'm going to get off of just in common sense, I'm going to get some type of retrace. I'm going to teach anytime you have a massive candle up or down, you're usually going to get a partial retrace of that candle, even like, a small retrace. So like here's one before. You see this right here? And it may be hard to see, but this doji retraced probably about a third of it.
Yep.
Right there. So most often you're going to get some type of retrace because what happened is in that day, price it went too far too fast in a single day. Okay? It's not always the case, but a lot of times. Now, when I get down to a very oversold condition too far away from the 9, then I'm really looking at that as a potential trigger point of some sort. Now, this is something just from seeing an absolute waterfall, okay, that is going to be a much riskier potential trade only for the real short-term traders. The real aggressive traders should be even considering this because I've got no pattern in place. It's a complete waterfall, okay? But, okay, if price is going to continue down immediately, okay, it shouldn't retrace back above there prior to going down. Well, what happens is because it's got such a downside momentum, price actually goes a little lower the next day. It happened to go 20 points lower the next day, and then it just gets to like a rubber band is pulled so far, it says, you know what, I'm going to snap all the way back up. And it actually even went above this 50% candle. You see that?
Yep.
Okay. But this is a very unusual situation. It's not too often the market falls literally 350 points consecutively. That's a heck of a sell-off. All right? Now, if I'm looking at anything like this on the daily chart, I don't want to go to a daily trigger. So my daily trigger is up here, isn't it? At 50%? Okay? Are you guys there?
Yep.
Okay. Yep. This is what happened with gold the other day. It plunged about $50. All right? Remember that? Big red candle?
Yep.
Okay. And son of a gun, okay, my trigger is so far up here, it's got to do so much work just to get to it, okay? There's just not a lot of meat on the bones here. I don't have a pattern. But you know what I'm saying to myself? Man, I'm so depressed on something like this. When I see something like this, what I would do, and I'm not going to show it here right now, I would shift to a 60-minute or maybe even a 15-minute chart and see if you get a capitulatory red candle down there. And by the way, you may have got one, and I'm sure you would have down here that would have reversed. All right? So, but let's just say we don't know anything. We don't even know that. We're just going to trade off the daily candle, okay? And Steve said if it's going to continue down immediately, okay, all right, it shouldn't take this back, all right? So here we come all the way up, and not knowing anything else, I would have triggered long here at 1160, okay? Got it?
Yeah.
But here's what I do immediately. Because I've got and this is a heck of a white candle. Yes, it's got a little wick, okay? If I was going to take this trade, my hope would have been that it may have been able to reach that 9-day moving average. All right? Got it?
Yep.
So now again, on this huge sell-off, I prefer to go to an intraday chart, but let's say we don't even know that. We're just going to go off of this. Well, the normal guy would say, well, now I got to keep my stop way down here or something, and that's fine. You could do that. I'm not going to risk this type of money. You kidding me? Okay, without a pattern or anything else. And I wouldn't have taken this trade, period, because it's not a bottoming pattern. It's nothing that I want. But let's just say we took the trade, okay? Where would I put my stop? I would look at the range of this white candle, which is 1100 to 1170, and I would say, well, if I have any shot of this continuing immediately to the 9, it shouldn't retrace 50% of that range, and I may even say I could look at where it opened and closed and tighten it up even more. So that's 1120 to 1170, that's 50 points, so 25 points is 1135. Okay, so this is a very volatile time where we're having 80-point, 90-point candles, 70-point candles. But if anybody didn't know anything else, took that long trade, they would immediately have their stop at 50% of that candle range. So I would have that, again, it's 1100 to, did I say 1170?
Yeah.
Yeah, 1170. So I would be at 1135, okay? And what happens? I get stopped out, and I would have lost on that 25 points. Got it?
Now your risk-reward ratio would have been 1-to-1.
It was not, and that's another thing I don't like about it, okay? I want a risk-reward ratio, even on an aggressive setup, 2-to-1 or better, and most of my setups that you're going to see coming forward are going to be 4, 8, 10-to-1. Okay?
Great.
All right? But again, this is just, I don't want to catch, okay, an absolute capitulatory or a bottom like this unless I'm an absolute aggressive trader and unless I have a decent risk reward in place. And if I'm going to do this, this is, for me, this is too much to risk to only get to there. It's like 1-to-1, right?
Yeah.
All right? Now, if I was able to take this down to a 60-minute chart, oh my gosh, I might get an entry way down in here somewhere. All right?
Mm-hmm.
All right? And
Yeah.
I have an example, and I'll go, I haven't opened up my trade station. I showed Robin an example on gold, okay? All right? Where on the 60-minute chart, I got nice little 5 waves down, and I got a divergent low on the 60-minute chart. And my trigger on the 60-minute gold was at 1283. My daily trigger was at 1310.
Wow.
It was literally
Wow.
27 points higher. And guess where the 9-day moving average is? It was at 13.19 or 13.20. Hell, I only had 10 points to make off the daily chart. Okay?
Yep.
No way. No way am I taking that trade, okay? I got to shift. When I start seeing these mammoth candles of this degree, and this is not anything normal, then I'm going to shift to my lower candles, okay? And I'll wait for this unbelievable momentum to dissipate somewhat into a better pattern. So this is something, if you go back and look, you'd see something like maybe that in 2008 when the world was ending, and here. But it's very infrequent. We could go from this point for the next 2+ years and you wouldn't see candles like this. Okay? All right, so let's get into more realistic. Oh, by the way, let's say we took that trade and we got stopped out for 25 points because we don't know any better. So I'm minus 25. Got it?
Yep.
I'm minus 25. Well, instead of panicking, okay, what happened? I got stopped out, but what did it give me? It gave me another huge red candle, didn't it, guys?
Yep.
Yeah, I was just going to say you had another opportunity
yes,
to get in.
Yes. So I'm down 25, okay? Now I'm down here, and I go, you know what? It didn't work last time, but I'm one of these system guys, and I'm not going to vary. So this is 1120, and this is 1170. That's 50 points. So at 1145, right there, if it goes back above there, I'm going to try it again. And where is my target, guys? It's going to be the 9-day moving average. That's my minimum target, okay? And
Yeah.
there is no, I can't look up here and see a pattern. Let me go expand this out because we're going to get into symmetry in a second. There is potentially a little bit here to show on this last bounce. I'm going to shorten this up on the right side so we see it. All right, so we actually had a little bounce. We had a bounce here of this distance. That would be something that I could also use as a guide on a bounce besides the 9 EMA as a symmetry thing. But these candles are so massive, it's of no use. Okay? So
right.
Again, we're going to get this is nothing that I'd be fooling around with too much, but without some type of candlestick pattern or a trigger. But we're down 25. We see the next exact setup with a red candle. By the way, when you get a red candle, white candle, red candle, like these three candles, don't look at the next white candle. You see these three. 1, 2, 3. Red, white, red. You see that?
Yep.
That's called a sandwich. Some of them call it a steak sandwich in a candlestick. When you see that, okay, look for a reversal. Okay? Very high odds of a reversal out of that. But I didn't have I only had one slice of bread on that first candle, didn't I?
Yeah.
Yeah.
And then I got my meat in white, and then I got my other slice of bread. So again, this is the reason about one candle doesn't give me a lot, but 3 candles give me more information. But let's say we don't know any of that, okay? We're naive. We don't know any of that. I don't know a lot of people who know all those candlestick patterns anyway. And let's just say, you know what? If it comes back above 50% here, oh, by the way, I didn't talk about where I'd put my stop. Okay, at the same time I trigger on the red candle, my stop immediately goes, and it goes simultaneously. So if price goes above this green line, and I'll change the stop to purple, I put a stop right there. Got it?
Yep.
Okay? So we see this big red candle at the close of that day. All we know is that Steve said if price is likely to continue immediately lower, it shouldn't retrace 50% of this. Okay? All right?
Yep.
And if it does, then since we're so far away from the 9, Our target here is that pink moving average. All right, well this time we get a little different result. We get a trigger right here, so we're back long, and we're long at 11:45. Our stop at the instant it goes through it. We don't wait for the end of the day. You guys clear with that?
Yep.
Okay, so I'm setting my parameters that evening. If it goes through 11:45, I put my stop immediately here, and it would be at 11:20. So I'm risking 20 points to make about, let's see what that would be. It's 11:45. That is 11:90. 45. Little over, almost 50 points. So it's a little over 2 to 1. Okay. So again, this is more aggressive trading. All right. And now, the next day we get a big up candle, don't we, guys? Okay. All right. It almost, in one day, it almost made it to the 9. You see that? It came pretty close, right? Right here? Is everybody there?
Yep.
Okay.
Hey, Steve, do
Yep.
you tend to go to the 9, or do you sometimes maybe put a point before the 9?
I will on it depends on what in the number of points will be the how big. This is 1,200, so I'd say 5 points plus or minus 5 points. But on an individual stock that's at $20, it might be plus or minus 25 cents or 50 cents, something like that. You have to adjust it to the instrument. You know, this is 1,200. So hey, and again, it depends on your nature and your ability to monitor. I'm giving this lesson with people who don't have to sit there. They may have a job all day. So you know what they're saying? You know what? Here's what I'm going to do. If price gets, within 5 points, something like that of the 9, I just want to put in an order to sell half. No matter what, I'll live with that. And then what I'll do is, when I come home, I'll adjust the balance of my stop. Okay?
Yeah.
All right? So you can predetermine, in accordance with your objectives what you feel comfortable with to do. And especially if you're not going to be there able to monitor it during the day. Okay? And this is tough to stomach, being away with this type of volatility. Let me be honest with you. All right?
Unless you're short.
Yes, but still, the principle here is going to work. And I'm not only going to get my 25 points back, I'm going to make more. Even just being an absolute idiot, I'm going to make money on this trade. I am going to make money. All right? So I'm in at 11:45, and we come home, and that day it closes at 11:70, and it got to almost 11:90. All right? Let's say it missed my dang little exit by a point or whatever, okay? All right, so be it. Take a deep breath. The first thing that I'm going to do is what? I'm going to raise my stop to 50% of that range. Okay? So I see a range here of 1120 to, let's just say 1190. You know, I ain't going to get down to every little ditty thing. We'll be here forever, okay? So that is 70 points. And 35 on 1120, 1155 is my stop. My stop is now here, and now I'm 10 points in the money even with my stop. Got it?
Yep.
Got it?
Perfect.
Okay?
Yep.
Now, all right, and I'm going under the assumption we just missed the 9. Dang it. And by the way, this is what happened on my setup with CTRP yesterday. It just missed the 9, but if I was a little patient, it nailed it today. Okay? But if it comes real close, like if you guys are sitting there during the day and you're going, my heavens, this is, and you see on a 5-minute chart, it's so close, and you just say, you know what, in this type of environment, I prefer to take some off, well, sell it up here. Okay? Sell it. And then if you're saying, you know what, then I don't mind keeping half down here to squeeze out what I can, you'll sleep a lot better. All right?
Yep.
All right, so anyway, here we go. The next day, we get a push, and my gosh, it probably comes within 1 or 2 points to the 9. But what I would do is, if no matter what, because I got that type of candle thing, and my aim on this setup is simply to try to get up into here, all right? Because I've got no real pattern, nothing great. I want to be conservative first. That's my number one rule. So if someone wants to be aggressive, they could keep half stop there, but I would suggest you're moving up your stop right underneath that next candle. Got it?
Yep.
All right?
Yep.
All right?
Yep.
Because that way, now what I've done is I've locked in, and again, you can do it on half or all. Now I've locked in 25 points, and I've taken back my loss. If you want to give it a little bit room, then you have to keep it here. I prefer on a setup like this, I'm going to drag it up. Okay? Now the next day, pow, she smashes the 9. Now again, if you're not able to be there, you would be stopped out. You would put your your order in somewhere around there. If you're there and you see it blowing through, you don't just automatically sell at the 9 if it's smoking through, right? That's stupid. Okay? You can shift to your intraday charts, guys, if you're able to watch this and just kind of trail it up. You know what I mean? And when it closes with a candle that's solid, it didn't do anything but go to its high at the end of the day. Okay? Well, the first thing that I'm going to do, if I didn't do anything else, is raise my stop to 50% of it.
Of that candle, yeah.
Because I've got a solid white candle, and now a solid white candle allows me to raise it to there. Okay? Now, let's be honest. I would, or the majority of people would have at least sold part, if not all of it there, and it's fine. It's fine. Get out of it. Go ahead.
You have more faith in these people, Steve. I find them to be a little greedier than that.
Okay. Well, then for the greedy one, here's where you are. Got it?
Yeah.
Okay. So I'm going to take care of those greedy guys, and I'm getting it up there, okay, especially on a setup like this. All right? So now, I've said, if price wants to continue higher immediately and maybe go after the 20 because it closed above the 9, well, then it shouldn't retrace over 50% of this. And by the way, I have 50%, and then I see a little doji right here with it. Okay? I say that lines up real nice. There's a couple of points right there. And guess what? I'm going to live with that anyway. And that there would be 1190. And that would lock in about 45 points for me. Got it?
Yeah.
Hey, so now, let's say I did nothing else. I lost, let me just finish this statement, Matt, then I'll answer you. So, playing dumb, I lost 25 points, okay? And now at the 9, if all we did was wait for the 9, I made 45, I'm net 20, and I'm out of the game. Okay?
Yep.
Okay, go ahead, Matt. Matt? I thought Matt was going to ask something.
Okay, sorry, I muted myself. Actually, I don't know if hey, you there, Steve? Steve?
Yes, I'm here.
Okay, sorry, I muted myself. So, I don't know if you noticed this, or if you use this, but you see that low back in like June, like 20th something?
This,
right at the 200-day moving average?
This one right here?
Draw a line from there to that peak. And then
That's a great,
exactly.
I should have expanded that out for a symmetry target.
It matches it like exactly.
This is exactly what I use, but I cut off my things, and you're going to see it over and over again.
Now, what it does, though, is it actually hits it from the body, I guess.
Yeah,
So
sometimes you'll go through the body or the low, and you're going to see this over here when I get into it. This, I didn't expand it out enough, guys, off the top, so my apologies. I should go back and look at the trend. So I'm just going to shift this out just a touch more, because that symmetry is very important. All right, and that was a rally leg. I think we peaked out, God dang it, this thing I think we peaked out at a 1370 here. Let me go back even further just so we see it. Yes, see 1370, guys? Everybody there?
Yeah.
All right, so excellent thing, Matt, and this is going to be repeated over and over again, Matt, but actually here is the move. You see this move, guys?
Yeah, yeah.
All right, so the fact that I was dealing with this, I usually don't even deal with this crap. I start here and then we go on. But this is where the market peaked in 2011, okay? All right?
Yep.
And if we look, this is an important concept and it's going to come over and over again. You see this rally here?
Mm-hmm.
So this would have been like wave 1, 2, and this is my third wave, okay? 4, 5, all right? But this is a guide of symmetry because in this downtrend, this was the biggest rally, right? Look at it, right?
Yep.
So let's take that as a guide, okay, as a guide, and let's put it across here. Oh my God, that's a pretty good guide. Right? You see how I did that?
Yep.
So besides the 9 and the 20, which are targets, and you're going to see me get real proficient using this symmetry, I could ahead of time, and thanks to Matt, I could have put a marker right here, right there, as a potential symmetry target. And can I not do that ahead of time?
Absolutely.
Because as far as I know, June came before August. This already happened. Okay? Unfortunately, I had the chart cut off there, thanks to Matt for putting that out. So my target would be this big circle here between the 9, the 20, and that area. I would have a initial target on my trade right there. Got it? Now, refining it down, or what do you want to do, how conservative you are, somewhere in that range, put in a sell for part or all your trade. If you don't do anything, what you do is you move your stop to where I said, which is right here. Got it?
Yep.
All right? All right, so let's get out of here and get moving forward now. We got to pick up the pace. All right? So we end up getting stopped out the next day if we were in that. Now, if you wanted to give this room, okay, and you were a player that says, you know what, I'm willing to give it room to see, and by the way, it really needs to break this cleanly. This is my symmetry, and I don't consider a little 4-point break on a 1200 instrument a clean break in symmetry. You guys got it?
Yeah.
If this would have went above the 20, it would have likely signified that this downtrend immediately was over, okay? But even this rally right here, was enough that it had a marginal break in symmetry. And really, when I look at it, this is a two-pronged move. It was an ABC. So like Matt said, if we take just this as a guide, a single leg, this single leg was exceeded on this bounce, wasn't it? Okay?
Yeah.
All right? That tells me, okay, and again, I know this from Elliott Wave anyway, okay, that this snapback is likely going to be an ABC and I'm going to get a higher low here. Again, I don't need to know it in advance so much because I'm just going to trigger off the candles. But let's move forward. The bottom line is we're going to try to keep this simple as possible. So even under this scenario, and all we did was follow those rules, would you guys argue that I could be up plus 20?
Absolutely.
And that I could have maybe done a little better, but let's not say that. Let's just say we stuck to our guns and we finished plus 20. So we were down 25, we made 45, and we're net 20. Now we're sitting here waiting for our next setup. And as you can see, even if we were holding, we got stopped out here. Okay? All right? All right? And the fact that it gets a solid reversal back down, let's track this forward. Okay? So now I get another big old red candle right here, don't I, guys? Don't I?
Mm-hmm.
Okay.
Absolutely.
You know what? Let's go above and see what's going on here. Okay. I'm back to an oversold condition on my RSI 5. Okay, so that's met. I'm not below the lower Bollinger Band. But anytime I get a big red candle and I get too far away from the 9, if you guys are traders, you could put a mark in here, okay, and say, hey, okay, do I want to take this trade? Well, geez, and let's see what this is going to be. I want to speed this up. This is 1130 to 1190, so that's 60 points. 1160 right here is my end, is 50%. Okay? Let me get rid of some of this stuff so we don't get confused. And this would be green. Whoops. All right. Now again, this is a decision one would have to make here to trigger this long. I'm going to ask you guys now. I'm going to quiz you. If this goes above here? If it goes above this green, besides maybe the moving averages as a target, what's really my target? Can anybody answer that?
Not the previous high?
How about this previous leg right here? So this was my previous bounce, right? You see this?
Yeah.
You see this? Okay. If I'm done going down and it doesn't turn out to be the case, I could hope for a move like that. So is there enough meat on the bone for if I want to take that trigger there? Yeah, there is. To me, there is. Remember, if price is going to continue down immediately, it shouldn't go above this green line. Got it?
Mm-hmm.
You guys got it?
Yeah.
All right, now watch. The next day, it probes up. It can't get to 50%. It gets within that candle, and then it comes down, closes at the low. Got it? All right? I could move my buy trigger to here, right there, okay? And now I'm still looking for a target right there. So you're going to risk, and this, remember, this is a very volatile time in the S&P, so there's bigger risk and reward here. 1120, and this trigger is at 1155. That's still quite a bit. That's 35 points to make 75 points. That's your upside target. So counter trend trading like this, you got to have a little guts. And I'd prefer, if this would have given me an even better trigger, you know what I would do? I'm going to fudge it, and I'm going to go to this solid red part candle. You see this, guys?
Yeah.
And I'm going to say, you know what? I'm going to take it at 50% of the solid, and then I'm going to keep my stop right there. So now I'm only going to risk, I'm going to take a shot that this isn't going to be an A, B, C, and it's going to stop in here, okay? And again, I'm going to take a shot and only risk this amount right here, which is like 10 points. Got it? And I'm still looking for an upside objective of that much. But really, what you want to see is, if you do this right here, okay, in the solid part, you want to see it get above this. Okay?
Okay.
So if you take that aggressive trigger, this is a little fudging, okay, type of thing, and this is more on the basis that this rally broke some symmetry. I'm looking for it should establish a higher low, and the fact of the matter is that I need to get back eventually above this line right there. But let's see what happens. Okay, I actually get an inverted hammer. All right, got it? You see this?
Yep.
I went through that little short-term trigger, and I came all the way back down here, close to being stopped out, okay, if I would have taken that like that, because I didn't get above here. Okay, that's the issue with this, is you got to be very, very careful, okay, trying to fudge things. But as it turns out, if I would have waited for here, it does come about. I get a big solid white candle. Now let's play it under the straight rules. My stop initially would have been here. Now I can move it up to 50% of that candle, right? At the end of the day. All right, am I losing anybody? So we stuck with this as my entry point, and this is a counter trend trade, okay, still, but we stuck with this, and we've got an objective target potentially of that symmetry. You see where that came from?
Yep.
Okay, so we just let it play out or get stopped out. That's the bottom line, okay? But here's the issue, okay? All right? When we go up, and this is what's hard to see when you're counter trending. You see this red, white, red? You know what it does? It A, B, C's up to this target. That's what it did. It's hard to see on a daily chart, but this first white one is A. It comes all the way back in B, and then it goes up in C. Here we're going to have an A, B, C up to target. So taking this type of trade, okay, what I want to be doing is tightening up my stop. This is eventually my target right here. This is eventually my target because that's the symmetry target. But as you can see, a lot of times I'm going to A, B, C. So if we triggered here, my initial target, 9-day, we get through there, my next target's going to be the 20 area. I pop into the 20, look at that. I get a reversal all the way back down into here. So a choppy ABC to take me up there. This is why, okay, all right, I'm not looking, and I don't teach in this thing, to be doing these counter trend trades, okay? Unless you're very experienced in that, okay, and you're able to take profits, all right, you're gonna get a lot of whipsaw. But this right here is a legitimate target, and if I went to a 60-minute chart, this would be much smoother than it is on the daily and show you this ABC. Okay? But by golly, overall, it ended up meeting the target. Okay? Now let's get into something much more realistic and out of this mess. I've just spent an hour on this, and I don't even like to go through this type of thing because this is not something that I want people really focused in on trading unless they're really, really on top of things. They got an understanding of what's going on. What I teach and what I want to know is topping and bottoming patterns. I want to find something that gives me support to go along with those candles. Fair enough?
Yeah.
Okay. All right. So we complete this ABC, and then we start down and we start a choppy decline. It's another ABC. This ends up doing a 1, 2, 3, 4, 5. Okay. For those of you here, a valid wedge, a proper wedge, we term it like an Elliott wave wedge, we should have 5 touches. Got it?
Yeah.
See those arrows? Okay. You see over here to the right. Now I'm going to shift this back out and get rid of this time frame. Okay. Let's start speeding this up. Robin, you still there? You there, Rob? Robin? You're there, Dennis, right? Matt, you there?
Yeah, she might have just stepped away for a second. She shows up there.
Yeah, no problem. All right, so here we go. Let's get into, away from, okay, forcing issues and this type of thing. Okay.
She's here. She put me on Skype. She could hear you. I guess maybe her audio is weird or something.
All right. No
so
problem.
she heard you.
All right, so anyway, let's get in here and get focused in on some better setups. This type of volatile stuff, okay, this reminded me of 2008 if you go look at that stuff. Hell, this is how the weekly candles looked in 2008, all right? If I'm going to do this stuff, guys, when I got 80-point moves in a day, why not shift down to the intraday charts? Isn't 20, 30, 40 points enough in a day? I think it is. Okay, hell. So let's go over here and as this is playing, okay, watch this. As this is playing out, I come down, up, down. Now, everybody okay?
Yeah.
All right. So I'm coming down. I know ahead of time that what I'd really hope for is a nice wedge to complete, but I don't know at this point right here with 100% conviction if price might not just stop here and rally out of there. Okay? So I've got an ABC. Maybe it's done correcting. I really, to complete an impulse, for those who don't know, you need a 5-wave pattern, and that's an Elliott wave. So I really know that it's going to come down here. But let's just say we don't know any of that, and we see an oversold condition right here, right? We see this? Got it, guys?
Yeah.
And now, between these 2 points right here, I've already got a little divergence forming. Look. Whoops. I don't actually have divergence between those points. My bad. Okay? So that's a problem, okay? But let's just say we see, okay, a solid red candle. We don't have a completed pattern, but we're aggressive guys, and we're looking for a trade. And Steve says if we get too far oversold, and that's where I am right here, and I've got a big red candle, I'm below the lower Bollinger Band, and if there's enough room between there and the 9, maybe I just want to take at least a trade and try to make some money. Fair enough, Dennis?
Yeah, I can see
Okay,
that.
so here we've got a low of 11.15 and a high of 11.65, so that's 50 points. Let's take it down to 11.30. Okay, let's see here. That's 11.65 and 11.15, 50 points is 11.40, excuse me. 11.40 is the midpoint. Okay, got it?
Oh, so you're using the midpoint of the high and the low, not the midpoint of the candle itself, the body.
Yes, I'm using I include the wick, okay?
Okay.
Because in this case, we've got a little wick. I'd prefer it to be as solid as possible. And by the way, I've also got a little gap on this one. You see that?
Yeah.
I want to also add in the gap. So I want to be a little on the safe side. I want to put it up a little above that. Got it?
Yeah.
Okay. So I'll rather be safe than sorry. So I want to see price the following day, if it's going to go, to get above that area. What I'm really hoping for is that I get some type of doji or something that allows me to tighten the stop. And in this case, you're going to see that happens the next day. So if I was going to take this trade, I'm not so gaga about taking the trade with a trigger there only to make it to the 9 or 20. You see that, right, Dennis?
Yeah.
Okay, because there's not a lot of great risk reward, is there? And I don't have a great completed pattern. I don't have any divergence. I haven't made a lower low here on a wider divergence. And near term, I don't have any divergence. That's what that line is. Got it?
Yeah.
So it needs for me to be objective. So the next day, you see what happens, how we get this little inside day? See this candle?
Yeah.
Okay, it's already signifying that price is failing to make a lower low, which is in it of itself constructive. So you know what I'm going to do? I'm going to move my buy stop right to there, right at the top of that little pattern. And you know what I'm going to do for a stop? I'm going to keep it right there. Now my target is only going to be the 9 or the 20. Got it?
Yeah.
That's it. That's my conservative target. So if you want to take this is viewed as a real aggressive trade. Well, guess what happens? The next day it pops up. It gives me a solid white candle. So with my stop, which is in purple, I can move it to 50% of that white candle. And now, at the worst case, I'd probably locked in a 5-point profit, right?
Yeah.
Okay. Remember, my buy trigger was right there, so it's not much. Got it? Okay. And you know what you're sitting here? You're sitting here with your sell stop if you're gone somewhere around this 9 or 20. If you're able to monitor it, what you can do throughout the day is drag your stop up. Got it? You could drag your
Yes.
stop up. Just like that. So you open higher, you immediately go to the 9, you blast through the 9. Oh my God, let me move it. It goes all the way up here. I could have been, if I'm able to watch it, there's an advantage. I could have been trailing up my stop throughout the day. Man, this is a heck of a winner, isn't it, Dennis?
Absolutely.
Okay, I'm in at 1140. In 2 days, I'm up 45 points at the peak. I'm not saying you're going to get the peak. Let's say someone put a sell order in at the 9, so they made 30 points. The next objective sell order would be somewhere around the 20. That's 40 points. And the peak was 45 points. Or 55 points, excuse me. Okay? So it's certainly an advantage, like it always is, to be able to sit there and monitor it. But the bottom line is, in order to consider this downtrend over, this is where it becomes important. You see these rallies here? These were my the previous biggest rallies, right? What I need to see to consider this the bottom, which is possible, anything's possible, I would need to see price get above that line and, in essence, take out this high. That would be a break in symmetry. But you know what I'm saying to myself? We don't have that completed wedge. We had no divergence in place. So let's be safe instead of sorry. So at least in here, I should be taking half off. And what I would be doing at a minimum is having my, if I took half off, I would raise my stop to right there. Okay?
What if you use a percentage trailing stop?
You could do whatever suits your needs, okay? But what I like to do is just look at the candles and where they're offering support, and they tell me that this is a key support area.
Yeah.
Okay? Remember, I've already taken some profits off. I've got to sell something into this. This is a huge move. Remember, this is occurring in 2 days from my trigger.
Yeah.
Not 2 weeks, 2 days. Okay?
Mm-hmm.
All right. So anyway, and by the way, at the end of the day, you see that type of shooting star, are you giddy as a long?
Not really.
No, because it gave back the majority of its profits, and that is a warning sign that, you know what, it might be just a quick hurrah and we're going to reverse down, and your pattern recognition should have told you to be on the lookout for that anyway. And you know what? You could be happy about it. Now let me tell you something. For you aggressive traders, okay, you see this right here? Okay?
Yeah.
You want to take a short on it, you could short it with a stop right there with a target to come back down to the lows. There's many opportunities to reverse your trades, okay?
Yeah.
But let's get away from that and all this aggressive stuff, and let's get to the more simplistic things, which are what we really want to trade. You can experiment with stuff like that on your own, all right? The bottom line is we fail, and it starts coming down again. Now, if I had drawn out this trend line off the lows, I could have extended that ahead of time, couldn't I?
Yeah.
Okay? And I've got now 2 touches on top, and I can extend them down. You know, it's kind of whippy. I like to just put them where I get the most touches. So I can have this kind of pattern look in place before any of this action happens, right? Is that fair to say?
Yeah.
Okay. So what I'm going to do is I'm going to put a marker down in here. I'm going to be looking at my prior low, my lower Bollinger Band, and this is a guide. And I'm going to say, you know what? If price gets down in here, I want to be on the lookout for a red candle. And the fact that I've got a completed pattern, I don't want to miss this. I want to get involved on this if I get a trigger reversal. Everybody following me?
Yes.
Robin, are you there?
Yeah, I'm here.
Okay. All right. So now, this is a very nice setup. I've got a low here at 1100, 1140, my marker goes in at halfway, 1120. That's my trigger. Okay? Now again, this is assuming that you're away, Robin's trading her futures and she sets this up on the S&P the night before, and it's either going to play out or not. She doesn't even have to watch it. Okay? All right? So I've got a buy trigger in here at 1120. If it goes through, I'm going to immediately put an close open order. I'm going to put a stop at 1100 because that was the low that night before. Got it?
Yeah.
Is everybody following me? The only way my stop goes in, Robin, you got to mute again, I think. If the only way my stop goes in is if this is triggered here. You following me, Dennis?
Yep.
Okay. So, my gosh, wild day. You know what they do? They actually open it down and it goes all the way down here, doesn't it?
Mm-hmm.
Okay. Now, if you were at a job working, you wouldn't know any of this. You're not watching the screen. All you know is that if it goes above 1140, I'm going to trigger long and I'm going to have a stop here in purple. And that stop isn't going to go in place until I trigger, right?
Yep.
So if it goes down first, it's not like I'm stopped out. I've never bought it yet, have I?
Yeah.
Right? All right, now, this is what I'm talking about for objective setups. Because I've got a completed pattern, I have a measured move. I don't know if you guys are aware of this, but this is the measured move right here of this pattern. You see where I'm shaking it?
Okay, so it's the first two touches.
It would be over here, 0.1 and 0.2. If I labeled it 0.1
Yep.
and 0.2, that is your measured move out of the pattern. Okay. Now, okay, ahead of time, I'm saying to myself, this is the low on that night, so I can put a little marker up here, and I'm going to put my markers in black so we can see them. Okay.
Yep.
Let me get rid of this here. Come to that in a second. All right. So we can put that in there in black. We don't know, okay, what's going to happen the next day. So this is the measured move of the pattern. And for me to risk that, now we're talking about a good risk-reward trade that I was talking about earlier, Dennis. So 1100, 1120, or this entry is actually 11. This should be at 1120. Got it? No.
Yeah.
No, that is 1120. Excuse me. Pardon me. This is 1100 and this candle is 1140. Where's 1120? Yeah.
A little higher.
Yeah, it's right there. My bad. 1120 is right there. Okay? Got it? That's where it should be. Okay? 1120 right there is the entry. All right? Got it?
Yep.
All right? So we're risking 20 points as programmed to make this much, which is 84. Okay? That's 4 to 1. Got it, Dennis?
Very good, yeah.
If you don't know, just so you know, this is 84 points.
Yeah.
Okay?
Oh yeah, it's a 4 to 1. You can just see it by the size.
Yeah. So in other words, this is much better risk-reward, right?
Mm-hmm.
Clearly. Now, we open up down, we go down, and at the end of the day, the son of a gun triggers us. Okay? Again, it's right here.
Steve, isn't it possible? I mean, I haven't looked at like candlestick charts in forever, but isn't it possible it opened, went up, then down?
No.
then up, then down?
No. That's not how the
No?
can. Nope. It goes down and then goes up.
It'd be
Okay.
very rare to do the opposite.
No, Robin, you're down here. Okay, it goes down and it comes all the way back up. So you're not
Okay.
you're not triggered here and go down. No.
Okay.
Okay. See, here's what's happening, Rob. This is a bearish engulfing, so there's still a lot of downside momentum. It carries over into the next day and goes lower. Okay.
Gotcha.
Now
Okay.
again, let's say I'm here and I can't watch anything. I've got to keep my trigger here. But guys, if you were able to watch this, this is another example where you could shift down to your intraday charts and get a better entry. Okay?
Yeah.
Because you're already aware that this is a decent pattern, and I got to be unaware that, in a wedge, oftentimes that last one is an overshoot. You've heard of that before, right, Dennis?
Absolutely, yeah.
Okay, you get them all the time where you get overshoots. But I'm not going to even proclaim that. That's just an advantage for those who can sit there and monitor and go in. What you're going to need to see is if you get in here, eventually it go above here, then that increases your confidence. Got it? Okay?
Mm-hmm.
And a lot of times it isn't going to do this. It isn't going to go from a red to a white. You see to the right here, guys?
Mm-hmm.
You see where I'm shaking? Instead of that, see, I start out with an entry right there. The next day I can tighten it up. This is what is more normal. This is a very, very volatile, tough time. All right? If we went back year after year after year, you wouldn't see a lot of these type of whippy, huge 50-point, 60-point, 80-point candles. All right? So I'm picking the hardest thing to do. All right? And after this, it gets real easy. All right, so anyway, we're going to stick with this. Okay? That's our trigger. That's our stop. Okay? Got it?
Yeah.
All right? Now, the bottom line is, at the end of the day or something, it comes up and it closes above it. I've yet to take out the previous red candle, so I really can't adjust my stop. I have to live with this stop. If you're one who is a panicky person, then go between these two, this solid candle, and maybe give it to there. But you may be risking it, okay? But if you're saying, you know what, I only want to risk 10 instead of 20, then so be it. And you're nimble enough to get back in, so be it. Okay? But this is off a daily chart, and our stop should be kept here. Remember, we're targeting this area here, and now, because we popped lower, I want to set a conservative target. Do you see how I did that?
Yeah.
I took it way off the low, didn't I? Okay?
Mm-hmm.
So I've already set a targeted range right here. Those are my first two targets. And if I get lucky enough that we break out, I'm going to set a third target right there. Let me see what I want to make sure this is precise. Okay? So I'm looking at my wedge right here. I'm a little aggressive. So I want to have this right here. That's my one target. There's my next target. Let me drag it down a little bit. And the breakout of the wedge, right there. Right about there. Okay? So do you see how I've tiered my targets ahead of time?
Yeah, I've never seen that.
Okay? I'm setting targets ahead of time, and it depends on what type of trader you are, what you want to do, but isn't it nice to have at least some type of targets? Here's the problem. This line right here, I've got a lot of wicks, okay? Do you know how I would draw the wedge, guys? I would ignore the wicks and take it, I would tighten it up. So this last target that I have, let's get rid of this thing. This last target that I have out of the wedge, you see that?
Yeah.
I'm
Yeah, it
always,
didn't change much, but
yeah, but you know what? I'm always going to err on the side of being conservative, okay?
yeah.
I could care less if things go above my target, okay? What frustrates me is if they come a little short, right, Robin?
Yeah.
So, you know,
Yep.
this darn wedge is so choppy. What I like to do is to look at it and how can I nail as many of these points as I can and get it tight, and that makes it steeper and it makes my targets more conservative. So that's just me. If you guys can do it better, so be it. I like to be conservative. Okay?
Mm-hmm.
So do you see that I even took one of the targets from down here, okay? Remember that? I'm going to go, so I'm not caught blindsided. Right here is my most conservative target. Okay? So now we've broken out of this wedge, so let's clean things up and get rid of some of this stuff. Okay? And we're going to take this one day at a time now. Okay? We can get rid of these lines because we've already got our targets in black. All right?
Okay.
Okay, so, hey, one thing I want you guys to know. If you know you're right and it's a proper wedge or it's ready to go, it ain't going to fool around. Okay? It's going to get up and go. Got it?
Okay.
So, and you see here, I'm going to fast forward. We're going to get 1, 2, 3 big candles, right? That's what I'm talking about. You see over here, look at this bottom. You see how it fires out? Okay? All right? We're going to talk about that in comparison to this in a minute, okay? But what I want you to know is if you know you're right and this baby is all coiled up and ready to go, it should start moving and strongly out of that pattern. It's like a slinky or a coiled spring. If you let it go, it should expand. If it's toe tapping around and dinking around, be on the warning that something may be amiss and start working your stop up, okay? All right?
Okay.
In other words, at these bottoms, look at them. Every one of them, they're going to go. It is like the pedal is to the metal. They're going to go. And we're going to talk about that over here a little bit. That's just a general observation and important to keep in mind. But we should see this because we've got a beautiful falling wedge. We've got it. Oh, by the way, you know, we had the divergence, right?
Yep.
All right. And we had nice divergence up here. And we even had mini divergence between these 2 points right here and here.
Yeah.
And by the way, that only shows up on the RSI 5, doesn't it? It doesn't show up on the RSI 14. And if I look below, it certainly doesn't show up on the MACD, nor does it show up on the stochastics, does it?
Yep.
Okay. All right. So anyway, we've got our plan in place. We've got our targets in place, and we need to just take a deep breath and say, realistically, here's my first target, here's my second target, here's my third target. Hey, you know what else is supporting this trade? And now I'm going to quiz you and see who can get the right answer. Do you know when price got way down here, we set up our parameters, but besides being divergent low and oversold below the lower Bollinger Band, what else tells us that it should rally?
EMA 9.
Atta baby! That's an A+. Good job, Dennis. We got way too far away from the 9-day down here, didn't we?
Yep.
So, Robin, if I was watching this and you're able to watch it during the day and you go, my God, we are down here at 1074 and this 9-day is at 1150. I'm 75 stinking points or 70 points away from it. I would start shifting to my intraday charts and go, oh, baby, that rubber band is going to pop sooner or later. Okay? And my gosh, if you could get in down here, holy Toledo, you might make 60 points just to the 9. Okay?
Yep.
But again, I have to talk about this in light of that you're having a job and you can't be there monitoring it, or let's say you're trading your futures and you have this set up in the background, you can't shift away from the futures to look at this, so you just let it go.
No.
You know what?
Yep.
Let it go. Okay? Sometimes it's going to benefit you anyway because you overthink things. Okay?
Yeah.
All right? We've set up, and everybody understands where I've set up my markers, right?
Yep.
Okay? And I can do that ahead of time. All right, so let's move on. Okay?
Okay, Steve, I got to step away for just a minute. I'll be right back.
No problem. You come back whenever. All right, so
Okay.
we move up the next day, right? We get another up candle, right?
Yeah.
Okay, now I can, because we took out the previous red, now I can shift my stop up to there. Okay? Or even here. And aggressively, I could stay at 50% of this range. I could stay there. But, you know, again, I want to let it try to go to my target. So I would go here, let's see, between here and here, about 50% of that would be about there. That would be your tightest you could be on your stop, okay?
Okay.
So if it's so tight, if it's so little difference, you know what? I'm going to keep it a little conservative. But I could be there because I've stated if you get a solid enough white candle, it shouldn't retrace into it. You see how it probes back into it, but it doesn't go 50%, Dennis?
Yeah.
And then it goes up again. Now, the next day it goes up. Now I'm going to shift my stop again, okay, to there. But guess what happened? We reached target number 1 on the 3rd day, didn't we?
Yeah.
Okay? So this to me is decision point number 1. Okay? On this type of pattern, I would have put on a full position. This is decision point number 1, whether or not you want to take some profits. If you've predetermined to take some profits, put it in. If you want to sell a third, half, whatever it is, or let's say you're one of these people that you loaded the boat on a futures contract off of this pattern, and my God, you made 60, 70 points on the futures. Well, that's a lot of money.
Yeah.
You know what I mean? So let's see what that is in terms of profit. Remember, we bought at 11.20, right?
Mm-hmm.
And up to here is 11.60. We're up 45 points. Okay? All right, got it? Almost 50, 45 points. So this is decision point 1. But what I tell people is, let's take a deep breath and let's re-examine, okay, what other clues the market may be giving us, okay? And I'm going to talk about some clues that this market gave us besides just breaking out of a wedge and this. Oh, by the way, I want to make this point, and that is, remember this rally right here?
Yep.
These were our biggest rallies in the downtrend, right?
Yep.
Okay, we can, ahead of time, set a marker, so we call it the symmetry marker. We can label that, and we can put that there. And if price gets above symmetry, I'm going to teach you something else. Okay, so I want to make sure you understand this. I wish Robin was here because this is going to be an important point. If we look at this entire downtrend, Dennis, I'm looking for the largest rally, and this is it right here. It happens to be about 110 points. Are you following me?
Yeah, you don't use the ABC rally. You just use one leg of it.
Yes, one leg of it because they're separate rallies, okay?
Okay.
Good,
Okay.
excellent question. I love you on here, okay? So I know ahead of time that the biggest single rally that I've had, okay, has been this distance, okay? So I take it off the bottom and I put it, let's change that to pink. Nah, we can't see pink. We can't see, let's change it to brown, okay? So we've got black and brown. Well, we'll change it to this blue so you guys can see it, okay? So we can put that up there ahead of time. And Dennis, Matt, you there?
Yep, I'm here.
Is Matt still there?
I think Matt's still there. He was asking me questions about
Yeah.
what you were doing.
Matt, this is important, man. Listen to this. This is important. Okay? All right. So we look ahead of time and look at our biggest rally. So we've set some targets based upon the stupid wedge. But this blue, if we get above there, it signifies that that's a bigger rally than, and I'm not talking about, guys, just a couple of points. Let's say we want to break it. We want to break it on 1,200 by 10 points. Fair enough?
Yeah.
Okay. If we get a clean break of that, you know what it tells me? It tells me that this downtrend is over. It gives me the confirmation that the downtrend's over. So I don't need to know Elliott wave, that 5 waves down complete. It tells me getting above there, it's over. And you know what else it's going to tell me, Dennis?
Let's see. Well, first of all,
I'm going to tell you, you don't know. Here's what, read what this says.
Broke symmetry. Look for higher low over time.
So
Yeah, it is
I
higher
know,
lows.
listen to this. I know that once I break symmetry, okay, that the next pullback is going to give me a higher low.
At a 50% retracement.
Now, remember, we have to keep this in mind that in the same degree. So this ends up being a big degree rally, okay, 1 or A.
Okay.
Then we A, B, C down. It's this subsequent pullback that I already know, and I can write this and put it on the chart, that I'm going to be looking for a higher low because we broke symmetry. Every time we break symmetry, we're going to get a lower high or a higher low, and I'm going to show you that, okay?
Okay.
So you know what I do on this? I put it way out to the right, okay? Let's see who this is. Oh, it's one of the guys calling in, okay, for a tutorial. Let me know. This is Steve. Tom, I know who you are and everything else. I'm on a tutorial right now. I'll be free probably in about 2 hours if you'd like to give me a call anytime 2 hours or after. Fair enough. Bye-bye. All right, so got it, guys?
Yeah.
All right, so again, we're back to our trade, okay? And we can get rid of this dashed, okay? Let's get rid of that stupid thing, okay? All right? So remember, we're right here after 3 days of rallying, right?
Yeah.
Dennis, you've been around a while, I can tell as a technical guy. When you see a rally like this, and I've got 1, 2, 3 white candles, do you know what that's called?
3 white soldiers.
Is that a baby? Man, you are around. Okay. 3 white soldiers aren't so common, are they, Dennis?
No, they aren't.
What is that kind of, like when you read a book, you read the prologue or the introduction, and it kind of foreshadows things that might happen later on? What does 3 white shoulders project? So, what does it give a high odds of projecting?
That the correction's over.
That we might be launching a strong trend.
Right.
Right?
Yeah.
Is it fair to say that?
Absolutely.
Have you ever heard of the term of breath thrust?
Yeah.
You ever you're up in Canada. Did they ever show the program Louis Rukeyser on PBS?
Yes, I used to watch it.
Okay, so years ago there was a guy on there by the name of Dr. Martin Zweig. You ever remember that guy? Marty Zweig?
Yes. Don't fight the Fed.
Yeah, Marty developed the Zweig breath thrust. Okay? Do you know, I don't have my stock charts open. Matt developed a little thing on it. Do you know that that's a very, very rare occurrence? It goes from, okay, an oversold reading, and within a number of days, you've got to reach from oversold to overbought. Okay? Yep. Do you know that in Marty's career, which spanned like 4 decades, you know that I think in that total time, he got like 2 or 3 signals? That's
Apparently,
it.
Yeah.
And do you know what he called it? He came out and said that launched a new bull market. That's how powerful it was. Now, 3 white soldiers by themselves does not accomplish a breath thrust, but it tells us to be on the lookout if we get follow through for a potential breath thrust, because that may be giving us clues that this may be one doozy of a trend. Do you know that this here, Matt, go check, this was a breath thrust in October of 2011? Okay, and look at what, by the way, look at what it launched.
Yeah.
A hell of a rally, didn't it? So yes. there are subtle clues. I'm not going to trade off of it, but isn't it nice to know in the back of your mind that, oh my gosh, if we get a breath thrust, we may really get a doozy, and that gives me more confidence. But let's just focus on the here and now. We've got 3 white soldiers. And thus, when I come to my first decision point and I see the ability of 3 white soldiers to power up there, maybe I'm not so inclined to sell any.
Good point.
Do you see where I'm coming from? Okay? I have no fault with anybody for taking some profits here. Okay? But let's just say that with 3 white soldiers, I don't want to sell it all. Okay? Mm-hmm. All right? Yep. So this is decision point number 1. Okay? And by the way, That also corresponds nicely to the 20-day moving average. It's always nice to break above the 9 and get to the 20. Those are simple guidelines. So now guess what? We've either taken some profits, okay, or we're in the whole trade. Either way, we should have some position left, especially after not hitting all our targets and the fact that we completed a pattern. And the fact, here's another thing, okay? This symmetry, this biggest rally, this occurred without any divergence, anything else. Don't you think that we should at least probably get to there with a divergent fifth wave pattern and a wedge? I do. Okay, so all of those combine to say that, you know what, let's at least give this a little bit of room for half of our trade, if not our entire trade. Okay, remember, we've got to stop in here anyway, don't we? Okay, all right. So anyway, what we're going to do is we're going to sit and see what develops. We've either taken some profits or we have elected to stay with us, and let's see where it takes us. Well, we do get a pullback, and it's not surprising after having a 80-point rally in 3 days that we get a little give back. And what do? We pop up, we pull back. But isn't this interesting? We're already finding support at the 9. Look at that. You see how, you know what it did? It broke above, and it got, even here, it got a little too far extended from the 9 for its liking and said, you know what, we've broken above it, but I haven't back tested it yet, so let's give it a shot. The fact that it holds, that's encouraging. We're not going to make any adjustments to our stop as of this time. There's nothing that's majorly changed. Let's see what develops the next day. Oh my heavens, we get a big bullish engulfing candle, don't we? It blows through target 2, and it actually slightly exceeds symmetry, doesn't it?
Yeah.
Boy, I'm feeling a little good, aren't you? Oh, by the way, at every time I get a rally, I like to go above and look at my RSI 5 to tell me also if I'm getting overbought. So we had those 3 white soldiers, right, guys?
Yeah.
On this third white soldier, look, wouldn't this be another reason to hold on? My RSI 5 isn't overbought yet.
Absolutely.
Look at it. You guys see it, right? So I'm giving you little evidence that this is the market's giving me that, and believe me, ask Matt, I'm one to take profits all the time, but I have the ability to get back in. But if you're just looking at these observations, you know what? You might say, this is pretty good. I'm willing to give it a little bit of room. Okay? All right, so the next day we get that big candle. We finally get just to the smidgen of overbought, but there's no divergence, anything like that. So the first thing that I'm going to do, guys, is what? I've got a solid white candle, Dennis. What would I do the first thing if I haven't done anything else? I've got a solid white candle. What can I do with my purple stop? I'm asking you.
Raise it to the halfway point.
I can raise it to halfway of that because I got a solid white candle, didn't I?
Yep.
So now I'm up there. Do you guys mind if I get rid of these targets now? It gets a little confusing. Okay.
Yeah.
So now I've got a stop up here, and I've achieved my secondary target. I don't see any type of reversal. What I like to draw in is, besides some of that, I'd like to look at the prior highs like this. Isn't that always wise to kind of look at the prior highs? Because besides some of my targets, I want to look at resistance. So what I say is this band right here, because those are the prior highs, and I've got a downturn. Is it fair to say that there's some resistance there to the left?
Absolutely.
Is someone there? Is someone back on? Someone breathing hard.
Yeah.
Okay. Robin, did you see? Were you here when I did symmetry?
I was here when I got back when you were talking more about the 3 white soldiers.
Okay. I'm going to just tell you.
That.
I'm going to tell you real quick so you don't lose sight. This is a very important point. Okay. All right. So remember in this downtrend here, remember that our largest rally was this distance. And it's just a single rally. It's not the ABC. It's fair to say, and you could look at the chart, this is 110 points. This is my largest rally. What I told everybody is this. off of the low, I put a marker right here for symmetry. And what it signifies, Robin, is if I can get above it, and I'm not talking on a 1200 price by 2 or 3 points, but I break it by 10 points or so, that's pretty good. What it tells me is that I have broken symmetry, and it confirms that this downtrend is over. Okay?
Right. I heard that.
All right. Oh, and did you also know that at the same time, I would eventually be looking for a higher low?
Yeah.
Okay.
Yeah, I heard
all right,
that.
All right. So you've already heard it?
I came in right about that same
All right.
that
So good.
time, yeah.
All right. So now I can get rid of this symmetry stuff. We've broken it. Why keep it on there? My stop, as you can see, has been shifted up to here, 50% of the white candle, right? Now, again, we did achieve some profit targets. So if you were so inclined, whatever your objectives are, it doesn't matter what's right for anybody else. You could consider taking some profits. We hit profit 2 and we hit symmetry. We're coming into a resistance band. Somewhere in here, okay, to me, is certainly a point that I'm going to be looking at taking profits. So let's see what takes place. I've got my stop here, okay, and I plow up into my trend line, and my goodness, she smacks into that, and when I look to the left, okay, you can see there's resistance there, right?
Yep.
Okay. So don't be naive and just tune things out, okay? I've got a resistance band. This entire area right here is really my resistance. Got it? So this, to me, is a decision point, clearly, okay, for anybody who's holding some shares that they may want to consider taking some profits. Let's look above and see if we're getting anything. Well, we're up to overbought, but I don't have any divergence in place. I'm not overbought on the RSI 14. Other than just some resistance, there's nothing screaming at me that tells me I have to sell everything under the sun. But selling some here, certainly prudent. Let's stick to just trailing up our stop and see what happens. We're here. We end up moving up a little higher, okay, right? I mean, if someone hasn't sold any, maybe I want to tighten something up here, right? But finally, right here, right there, you see this candle?
Yeah.
I get a solid white candle right there, don't I? Don't I?
Yeah, you had a sandwich.
If you're one of these that says, you know what, I don't know how to take profits. I know it's into resistance. I'm one of these people that just doesn't know, and you want to let the market take you out apart. Well, then shift half your stop to 50% of that white candle right there.
Yep.
Okay? And say, you know what? If this reverses back below there, you'll get an exit on part of your trade. You're going to be happy because that is 100 points from your entry. We're now at a C note, 100 points. Okay? All right? And if you take some off, okay, then it allows you to keep a more liberal stop at 50% of this range. If you're not, then I would keep at least some up here. I don't want to give back this type of profit from way up here all the way to down here. That's just me. That's almost, 20, 30 points.
I can't
okay?
stand.
All right?
Yeah,
so
I
anyway,
can't stand to give it back.
so anyway, here we go. And I don't care if you exit out of all of your position here, because as the market often does, it's like a taxi in New York City. There's another entry coming by if we be patient and allow for it. So remember, I had my third symmetry target up here, and that would be another area to consider, right? Look what it did. It literally hit my third target to the penny almost. All right? But anyway, let's just say we took some profits out of here, no matter what. I certainly would have, okay? And even if we sold it all. Let's be patient now and see what develops. One of the things I want to do with my stop is always keep it underneath the 9-day moving average. You see that?
Yeah, I was just going to ask you about that, if that wouldn't be a
Okay.
good place to
Yeah,
put
I want to
on a
keep it under there
closing
because, you know, as I alluded to, price likes to come back to the 9, right? So if I keep it under there, okay, I don't want to certainly tighten it up too much. If I'm swinging anything out of here, if I'm a guy that says, you know what, I can't get in and out, I'm at work, I'm doing this, take some profits and keep it at 50% and keep it below that 9-day moving average until the market allows you to raise it. And in order for it to be raised, I need to take out this resistance area. Okay, so let's just see what develops. We end up chopping around for a few days, right? Okay, here's what I do on my charts. It hit my third symmetry target, so I can get rid of that. But what happens over a couple of days is this. I get a couple of touches there that I can stand off of, and I get a couple of touches right here, right?
Oh, yeah.
Okay, so this is the beauty of drawing in some patterns, because once I do this, oh my God, now I see something else, okay? And this is a pennant, right?
Yep.
Now I'm going to teach you guys something, okay? Took me a long time to learn this on measured moves, okay? So I'm going to shift this to blue, all right? So the leg from here to here is a straight leg, okay? Before I get my first pullback in that red candle, right here I get a pullback, okay? This pullback is going to be important too. You're going to be amazed at what I show you, okay? All right, so that's a little pullback. We're going to keep that out of the way for a while. So I see this Dennis and Robin developing, and you know, I exited some of my position, or let's say I sold the whole damn thing. But guess what? This sucker ain't ready to go down. It keeps holding the 9 and it's consolidating into a sideways pattern. So you know what I start thinking to myself? By God, maybe I can get another trade out of this. And I say to myself, oh, what could I use as a trigger? Well, this to me is a continuation pattern. We talked about patterns. This is likely a continuation pattern. As long as it holds here and breaks through here, maybe I want to take a long. And where would I take a long? I would take a long triggering there. Do you see that? Breaking that trend line. Do you got it, guys?
Yep.
And I could kind of look over to the left and I get so many touches there. I like that. And this is only a trade. Now, if I'm going to take this trade, I say to myself, well, if I'm going to take a trade, I want to know how much meat is on the bones for me to take it, or I ain't going to take it. So this is where I come from. So this move right here, remember we had a little consolidation right there. So this move right here, from there to there, is my push. So I'm going to set 2 targets off of this. Watch. Target number 1. Target number 1 is going to be the conservative target off the bottom. So I'm going to let's set targets in black again, okay guys? So we're going to set target number 1 right there. Oh my God. And if I break out of the pattern, the textbooks would say I can set target 2, and I've got it there already in red. Do you see that?
Yep.
Oh my gosh, this stuff is getting spooky. Okay. Now you don't know ahead of time this, but we can put this black line and this red line out there as targets, can't we? Is that fair to say? Go ahead.
Yep.
Why did you start that first that measured move at the bottom of the white candle and not at the bottom of the red of the low of the red candle?
Because this is exactly where it started from, and I have learned, okay, in doing this so many times, always take the most conservative move. And this is where the white up started, and it ended on that white candle right there.
Okay, good point.
And do you see that before I got up to this arrow, I got a pullback first?
Mm-hmm.
Do you see that? So I'm telling you guys, if you will always stay conservative, your objective measurements are going to be better. and you're not going to get blindsided by missing targets. Okay? And there must be, hey, there must be something right about what I'm doing, because it is ungodly that we stop there and there. Isn't it amazing?
It is mind-boggling.
All right. And I'm going to show you, time and time again how I do it. So I set my targets ahead of time. All right. And so what I'm saying is, you know what? If it goes through here at 1225, I'll buy. My initial target is 1255. That's 35 points. My ultimate target would be here, which would be almost 60 points. Got it? Nope, almost 70 points. This is 1225. Everybody following? Okay?
Yeah.
We've set our parameters. Let's get this out of the way. Let's get rid of a bunch of these stupid arrows now. Clean this baby up. All right? And lo and behold, okay, she pops through right there, right? Now initially, if I would have bought, here's how I would have traded it. If I would have triggered here off of that pattern, I would have had a stop right there. That's how tight I would have had it. It has no business to me reversing back below here if it's going to break out. Do you understand my reasoning?
Yeah.
Why should it come back to today's lows if it's going to solid break out? It has no business to. I'm not going to risk a penny more than that. Okay? And lo and behold, it breaks out solidly. Well, that tells me right there, because I get a solid white candle, I can raise my stop immediately to my entry, because that's 50% of the white candle. Got it? So now I'm at break even. Got it? And what am I targeting? What am I targeting? I'm targeting this target, right? Am I not?
Yep.
All right. Well, the next day it hits my target. Let's say I didn't do anything. The minimum thing I would do is raise that stop to that distance. Got it? Because that's another solid white candle, isn't it? Isn't it?
Absolutely.
But guess what? Whenever you come out and you hit a measured move, it's normally a good idea to consider taking some profits. It's usually an inflection point, and I'm going to show you, okay, what happens and why. All right. Now, if we look down here, let's get rid of this. If we look down here, we had our biggest pullback in the entire uptrend right here. Look at this. You see this pullback? I'll change it to blue.
Yeah.
That was a pullback, right? You see this? That was bigger pullback than anything we've had so far, right? Is that true?
Yeah.
Yeah. All right, let's keep that in the back of our minds, because that's going to set my symmetry. Okay? So one of the things that happens when price gets up here is it gets too far away from the 9-day moving average again, doesn't it?
Uh-huh.
It's now a little ways away from the 9, isn't it? And it's near the upper Bollinger Band. It didn't quite get outside of it. I'm not saying it can't go higher. It's just a decision point. And when I look above, look at my RSI. Look at my RSI 5. And you would never see this on another indicator. Do you see that teeny little divergence between there and there? You see this?
Yeah.
Those give me pause that, you know what? We could at least get a little pullback. Is that fair enough to say? Am I providing evidence to you guys? Okay.
Absolutely.
Doesn't mean it can't go higher. I'm just telling you this here is a decision point for all of those reasons. You make your decision. What would I do? Because I went on here, I'd take some profits at a minimum. I'd tighten my stop to there. I am like Robin. I don't like giving back damn profits. Okay? Period. Okay? Guess what? 25, or this would have ended up being 30, 35 point. They add up. Remember, I made 100 on the first thing. Now I've made a 30. I'm up 130. Right? Am I not?
Yeah. Now
Okay.
with the MA50 up there, wouldn't you sort of think it would go and touch it?
With the what up there?
The moving average.
That's the 200.
200, sorry, yeah, the 200.
Oh, it could have, but maybe it has to recycle before it does.
That's a good point. Yeah.
Again, at worst, I want to have my, now if you want to be really patient, okay, on a swing, because we broke out of this area, your stop should be somewhere down here then, okay? Somewhere here, here, here. Got it?
Okay.
Because otherwise you're going to get stopped out. I have to stay below, what did I say, the 9-day moving average, don't I?
Mm-hmm.
So I'd probably, for me, I'd keep it somewhere in here. I don't need to keep it way down here. I'd keep it up here. So let's say you're one of those people like Robin has that are real patient, okay, that think, you know, things not always go up, then keep it down there. I like to sell at targets because I'm pretty good at identifying targets. And I could get maybe back in again, and I'll show you how. Anyway, whatever you do, the bottom line is it pulls back. That's what happens, right? In this particular case. And I said this was the distance that it pulled back. And as long as it doesn't pull back beyond that distance, I'm not breaking symmetry, am I?
No, you're right.
So guess what? Is this not another reason to maybe keep my stop there? Because if I start going too much below that, I start breaking symmetry. Do you guys see how this pulled back identical to my first pullback?
Mm-hmm.
How many people would have ever taught you this in this uptrend to look for those two clues there? How about, I bet you've never been told that.
No, never been. You're right. I've never seen that.
So isn't this a nice guide? And isn't it amazing that probably to the dollar it came right there and stopped?
Yep.
Why does it stop there otherwise? All right. Anyway, if you want to be a trader, okay, and the fact that its symmetry is holding, guess what I got here on this downtrend, or on this pullback? Did I not get a solid red candle?
Yeah.
Right there? Well, you know what I'm going to say? If price wants to go back above that red candle, I'll buy it again with hopes of hitting my target up there, and I'll risk that amount of money. No, whoops. I'll risk that amount of money. The bottom of the red candle. Got it?
Yeah.
Now this is more aggressive. We're getting higher up in the uptrend, okay? But the clue to this is that I've yet to break symmetry. If it's going to go down the next day, I'm not going to get triggered anyway, right? Right?
Yeah.
But if it's going to go above it, okay, then it's telling me that it's already done pulling back and it's likely to hit my next target. So let's see what happens, okay? The next day, I trigger long right there, okay? And I'm actually in at a lower price than I just sold. Isn't that amazing? Okay? And by the way, I sleep pretty well. And now I've got my risk parameters. I'm going to risk that amount of money right there. Okay? And another thing I'm going to teach you guys, when a pullback occurs, okay, if the uptrend is going to continue, it'll hold symmetry, and a little guide is that if we pull back, we're likely to take that pullback back in the number of days or less. So on this rally, I pulled back 1-2 days, I took it back. On this rally, I pulled back 1 day, I already made a new high. You'll count during uptrends that I get pullbacks, count the number of days you pull back, and if it isn't exceeding that prior high by that number of days, it's a little warning sign. It will almost always do so in the number of days or less. Another factoid that you guys probably didn't know.
Correct.
All right. Now, I'm going to rely more on symmetry than just counting the candles, but I'm telling you that. Okay. All right. So the next day, oh my heavens, she comes with the big old exhilaration candle, and my God, it hit my target. It went right to my target. That's a decision point. let's say you're not proficient at drawing targets. What would you do? You would raise your stop to 50% of that, wouldn't you? 50% of that candle. Now, once I raise my stop to 50% of that candle, what I want to do is let's look at the playing field and see what's going on, okay? Is there any changes in the playing field? Well, for the first time, and I know it's hard to see, we did actually touch and slightly exceed the upper Bollinger Band. So that's a difference in the entire uptrend, isn't it?
Yep.
Okay. You know, we got real close. We got real close to the upper Bollinger Band right there. But this time it got it. Okay? So it's like driving on a road, you know, you're on the pavement and dang it, I looked down and I got on the gravel. Whew. You know, I got to ease back in. That's really how I think of the Bollinger Bands, is when I'm driving on pavement and I start getting on the gravel. I don't like being there. Okay? That's the analogy I use. All right, so here we are. Okay? We're up here. Decision point. Maybe you're one of these guys like Robbins people that think it's just going to keep going. Well, then just move your stop to here. Okay? That's where your stop goes. Okay? See what you can get out of it. Maybe it'll give you a little more. But if you're a profit-taking guy or something, that's a decision point. Everybody following me?
Yep.
Okay? Now the next day, we get a subtle clue that she might be tiring because I get a little inside day candle. What I would do is, if I wasn't out, I would raise my stop to there. You see how I shifted it right up to there? Can everybody see that?
Yep.
You see where I shifted it? Okay. Another thing I want to point out is I've got now double negative divergence up on my RSI 5, don't I?
Yep.
See that?
And RSI 14, no?
No divergence.
Nope,
see,
yet.
that damn RSI 14, it don't tell me crap. Okay.
Useless. Yep.
All right. In some cases, it's useless. It's not quite overbought. So someone might be saying, well, I'm going to hold out until this gets overbought. Well, those people who held out until it got overbought gave back a lot of profit, didn't they?
Mm-hmm.
All right. All right. So anyway, now, when I see this type of evidence that I've come a long ways and I've exceeded the upper Bollinger Band and I get one of these capitulation candles and I've especially got multiple points of negative divergence, you know what starts entering my mind? Besides a stop, what else is going on here? Dennis, you'll nail it, I bet. What else up here tells me to be on the lookout for maybe a pullback? Besides what I've talked about, what's the answer?
Well, you've got a retracement of almost 0.618 or more.
I don't care about that. What else in simplistic terms tells me that I've gone too far too fast? What is it? What's the answer?
Well, you're above the 200-day moving average.
Yep. You're getting closer. It's something to do with the moving average, but it ain't the 200.
Oh, then the MA9. What am I thinking?
Oh my God, how do we forget when remember we spent all this time down here, we're so far away from the 9. Is this not clearly the biggest move away from the 9 in this entire uptrend?
Absolutely.
Is that fair to say?
Yep.
All right, so besides a stop here, might I consider a trade short?
Yeah.
Look at my evidence. I've got this going on. I've hit the upper Bollinger Band. I've got a nice tight stop. I'm going to risk that, and my minimum target is going to be that 9-day moving average. Or if you want to be ultra conservative, my minimum target should be that symmetry, right?
Yeah.
How about the prior two pullbacks?
Mm-hmm.
And guess what? If the pullback goes below the symmetry, oh my God, guess what that's going to tell us? What's that going to tell us if it goes below the symmetry?
Well, that the move is probably over because...
No. It's going to tell us, not probably, it's going to tell us that this puppy is done. And what else is it going to tell us? What else is it going to tell us? It's going to tell us that the next rally is likely to form
Oh, and
A
lower high.
lower high.
Right.
Oh my gosh. This is powerful information ahead of time, because here are the two prior pullbacks. And if this exceeds this, and I'm not talking by just that one day, but look what happens. I trigger short here, and here's how I'm going to trade it. I trigger short. That day I get a huge red candle. I can immediately move my stop to 50% of it. You see how I do this, guys?
Yeah.
Okay, so at the end of the day, I can lower my stop to there. I haven't quite hit my 9, okay? If I'm gone, if I have to go to work, maybe I'm saying I just set part of my stop there or something, I'm happy with it. But if you can watch it, you see a bearish engulfing, watch it the next day, and then start dragging your stop down, and you go, oh, this is going lower. In fact, it's going a lot lower. At the end of the day, I would lower my stop at a minimum to 50% of that red candle. Now, I forgot to mention this. Why, in this case, would I maybe not just look for the 9, but to look for the 20? What's different about this high versus the other ones?
Oh, let's see.
I got outside the upper Bollinger Band.
Right.
And when you get outside the bands, what do they like to do? They like to come back and test the middle band, which is the 20. I never did that before. Is that fair?
Yeah.
You got it? And now, did I break symmetry? I shattered it. I went down twice as much, didn't I?
Mm-hmm.
Everybody see it? Robin, you understand this? She's probably gone. Matt, you there?
Excellent.
All right. So I just made a lot of money again on this trade to the downside. I entered at this level right there, which is at 1275 conservatively, almost 1280. At the 9, I'm at 1240, roughly 1245. And at the 20, I'm down here at 1215. I've made 60 points on that 2-day short. And at worst, I'm going to stop here. So I'd make, what, 45 points or so. Okay?
Mm-hmm.
Now, even though I've broken symmetry, okay, let's keep in mind that my moving averages are still all bullishly aligned, even though I pulled back. Every one of them is still pointing up, aren't they?
Yep.
So is it not surprising that there would be some buyers on touching the 20-day at the first time we've touched it in many weeks? Not to me. Okay?
Mm-hmm.
So when these moving averages are still trending up, and they are still on this pullback, it's not surprising to see that that support holds. Got it?
Yep.
All right. So whether I took some profits here or get stopped out, I made a profitable trade, right? And I would reverse this statement and put it up here and say, on the next rally, let's be looking for a lower high. And I told you why, right? Got it?
Yep.
All right. So we're going to fast forward this now. We end up going up, okay? It ends up ABCing. It ends up ABCing. You see this? You'll really see it on a 60. It goes ABC. Got it?
Yeah.
But let's just say we don't know that. And we see a 2-day rally here that gives us a solid white candle. Got it? And we don't want to miss the short, because do you know what our measured move of our next short should be at least? It should be this distance. Do you see this?
Okay.
And you know what? Man, by the way, that's almost 80 points. So if I can put in a trade and risk 10 to make 80, I'm going to kind of look for one. You see where I'm coming from?
Absolutely.
Okay. So this is a 2-day throwback. And guess what? I dropped 1, 2, 3 days. In order for another piece of evidence for this to make a higher high, and I know it's very unlikely because I broke symmetry, it needs to come back up to this high in 3 or 4 days. Well, it's off to a good start in 2 days. If it wants to keep going, so be it. But you know what I might do if I don't know anything about it, like an ABC? I might want to put a marker right there and say, I want to get back on my short side if it goes below there, and I'll put a stop right there. Do you see where my stop goes?
Yeah.
Okay. And do you know what my downside target is? It's this distance, right?
Yeah.
Now, in this particular case, I would have triggered short, and I'm not getting a lot of downside, okay? I give it a little room, okay? The next day it probes down again, but it rallies back up. Ugh. I start recognizing that, you know what, I'm probably maybe a little bit early on this short, and the next day I get stopped out. So I would have taken the heat on this, and it would have been about 10 points, okay? All right?
Yep.
But instead of losing my confidence, I should have said, you know what, this may be A, B, C'ing. Steve said the break in symmetry, I still should be looking for a lower high. Now I'm going to talk about what I didn't like about that, shorting that. My RSI 5 was only around neutral. It didn't get up there, okay? I'd prefer it to get as close or overbought as possible. You understand, guys?
Mm-hmm.
Okay?
Yeah.
So, but even if I took a 10-point loss after making 130 points, it's part of doing business. You're going to get stopped out occasionally. Not all trades work, okay? So I'm playing dumb that we're just going to take every damn trade that's possible, okay? And if we lose a few, we lose a few. Well, the next day it may have stopped me out, but guess what it gives me? Another white candle, doesn't it?
Mm-hmm.
So instead of crying, let's reset it at 50% of that white candle. Remember, I'm still looking for a lower high. See, this is the benefit of knowing symmetry, that I should be on the lookout for a lower high, and I want to be prepared. And guess what? This little oscillation allowed that RSI 5 to go a little higher for me. See that? It's not ideal, but it's a little higher. It's a little more overbought, isn't it? All right, so I'm going to set my thing. Maybe it'll trigger, maybe it won't. But if we look at 50% of that candle, it's about there. And let's just go up and see that that is 1265. Okay? Remember, my downside target is hopefully this distance because that was the first leg down. Everybody following me?
Yep.
Yep.
So you know what I would do? I would maybe put a target right there. I just put a little target on there. I know it's not likely to go there in a day or something, but I like to be prepared. Okay, so I'm pissed off. I lost 10 points on that damn trade. Dang it. God dang it. This crap Steve teaches me, it don't work all the time. Okay? All right, so let's put it in here. Okay, and my goodness, I trigger here, and she drops literally in a day 50 points. Okay, without knowing anything, I have a solid red candle, don't I, guys?
Yep.
So what's the first thing I would do? If I did nothing else, I would lower it to 50%. And now I've made
stop, right?
Yep, for my stop. This would be my stop, Robin. And now I have made back my loss and probably a little bit more. Is that fair to say?
Yep.
Because this distance here between my trigger and this maybe is 15 points. At least I got my loss back. I'm feeling a little better. My wife's off my back. All right, but let's talk about something conceptual, okay? Even here on this red candle, what are the moving averages doing? And in particular, still the 20. It's still moving up. Even though I've had these sell-offs, it's still moving up, right?
Yeah.
So they're damn it. These suckers are going to fight, okay? And a simple thing I want to tell you is, and I talked about it over here, anytime I get a huge candle that's well outside of an average true range day, and if you're not aware, the average true range on the S&P for the most part is about 10 points. So when I get a 50-point candle in a day, would that not be a reason to at least consider maybe taking a little bit off? I know Robin would, right?
Yeah.
But let's say
Yeah, I would.
you bet she. I don't even have to ask her. Okay, but let's say we have the advantage of being there the next day, and guess what we can do? We can see it starting out, and it's not going even below the dang low. It's stopping and coming up. Maybe what I want to do is, at least on part of it, drag my stop down. Maybe I'll keep part there. That's okay. It's okay to be stopped out there. I make money. But let's drag it down. Maybe do that. Because you know what? The darn thing's not coming down. But on the other hand, if it doesn't take back 50%, do I want to be caught without any short? These are decisions you have to make. Okay? All right?
Yeah.
It's easy in hindsight to say, well, I would have sold it. Okay? I would have sold it and got back in. Well, you don't know that. All right?
Right.
We do know that we're targeting this measured move. We do know that. But the market says, you know what? I'm not ready to go down yet, Steve. I'm going to come back up again. Oh, you are, huh? Now, guess what I'm going to do? I did it before, and I'm going to do it again because now I've got a lower high and a higher low. So what I'm going to do is say, oh, maybe the market is creating a pattern for me. And it sure as heck is. Is that not something I can draw in off of those two? I've got this low, and this high, and this high, don't I? They're already in place. All I'm doing is extending them out. Am I not?
Yeah.
So now, and it takes me 10 seconds to do that. It's not a lot of work. And now I'm going to, you know what I'm going to say? I haven't hit my darn symmetry target yet. So I'm still favoring a downside move. That's what I'm saying to myself. But because I've got a bigger consolidation pattern here, I'm going to respect a break in either direction. Okay? So I'm still going to lead to the downside because of the reasons I told you. But if it broke above here, I would take it as a trade long. If it breaks below here, I would take it as a trade short. And those are simply trend line breaks. Got it? That's one way. That's one way I can trigger. There's another way I can trigger. After this, I rallied back up here, and I again got a big white candle, didn't I?
Yep.
Right there. So let's do it
50%.
again. Let's do it again. Let's say 50% of that candle is there, and my stop would go. Do you see how tight I don't put my stop way up here. I put it there.
Yeah.
Okay? Because I don't want it up there. That breaks the pattern. If it's going to go down, it should stay below there. So again, I'm risking roughly 10, 15 points, but I'm risking 10, 15 points to make 80 points. Do you guys like that? I do. I don't know if you do. I like it. So
Works for me.
So, in other words, I can trigger here, or if you recognize the pattern and you want comfort, you could trigger there. Those are your two valid trigger points for a short. Make sense?
Yep.
Okay, and then guess what? Let it play out. Well, if we took the trigger here, we're triggered and we've got our stop there. Woo, man, she's coming close to my stop. But you know what? It ain't getting it. And I can't lower that stop until I start taking out a previous low. So it just stays there. Or if you want to be on the conservative side, you can wait for the pattern right here. You do what's appropriate for you. Well, finally, I get a nice solid red candle there. Now, once I get that solid red candle, if I took this one, that allows me to move my stop right there to break even already. Do you guys see that?
Yeah.
Anybody lost? Robin, you lost?
Nope, I'm good.
Because it's a solid
I'm
red
good.
because it's a solid red candle and I took the stupid short here, it has, you know what? If it's going to come back up here again, okay, I'll stop out and I'll get it again. Otherwise, I wait. Now, if you want to be conservative and you just say, you know what, I'm willing to risk that anyway. It's only 10, 15 points. Keep it up there. But I'm telling you, after a solid red candle, if it's ready to go, it ain't going to retrace it. And you see it doesn't, and it blows through. So I'm either short here at this level of let's say 1250, or I'm short here at, we'll be safe, 1230. Either 1230 or 1250. No big deal. That's where I'm short. And now I'm going to start setting my targets. Watch what happens, guys. I've got my first target, and we already set that a while ago. Remember that? I'm going to set it conservatively off the high. Got it?
Okay.
So I'm going to set target 1 here, and I'll change it to black. And watch this. When you draw proper patterns, what happens? I'm going to set target 2 off of the break of the pattern.
It's nuts.
Did you see how I did it?
Yeah.
Now, this isn't the first time I've done this, right? Is it fair to say I've done this before?
I think so.
Okay.
Yeah.
I did it on the, remember I did it on the other pennant over here, didn't I?
Yeah.
Okay. All right. So I've got target 1 and target 2 in place. I can go listen to some, TV bull crap or whatever, because really I'm set. So after this red candle here, I can now lower my stop again to 50% because it's a solid red candle. At minimum, I would bring it all the way down there. But again, I'm going to tell you guys, this 50%, I just don't get stopped out. I just keep it a little bit above it if it's a solid enough one. So I'm targeting this level and this level. Fair enough? Okay? All right?
Yep.
So I get a little doji candle. If you get nervous on some, maybe you want to tighten up your stop there and keep a little bit there. There's all kinds of ways you can do it. But until it hits my targets, I don't want to be tightening my stops too much because these are my minimum moves. All right? And then boom, on this day right here, she smashes into my first target. Oh my gosh. I'm making money hand over foot here. And these aren't ticks. This is real money. Okay? So even if I got in here at 1240, I made another 40 points. If I got in up here, I made another, 55 points. Okay? And if you were able to watch it during the day, you can see it's not stopping at my target. It's blowing through it. So maybe I could have got a little more. But this general area is decision point number 1. Okay? And did I not identify that ahead of time?
Mm-hmm.
You do what's right for you. There's nothing wrong with taking some profits there, but until you see a clear sign of evidence, I wouldn't sell it all. What I would do is I would bring my stop down to 50% of it. How about that?
Yep.
Okay? If I get stopped out of there, am I going to be pissed off? No, because I made 40 points anyway. Okay? Let's see it. And guess what? Here's the let's see on this date. Oh, I'm just touching over. I'm just moving under 30. Okay? So I'm oversold, but here's another clue. I'm not yet too far away even here from that 9-day moving average, am I? I am a little bit down here, so that's why the next day, but I'm not precipitously yet away from it, am I?
No.
In this area? All right. So and again, it's always better to be prepared. Even here, guys, if this is happening once I'm oversold, not only do I have to make a decision about a stop, I'd have to make a decision here if I want to go long too. Got it? Got it?
Right.
Okay.
Right.
All right. It's easy in hindsight to say the ideal points, but I'm pointing it out because I'm already oversold. You'd have to make a decision. And the reason why is, here's what I would say. If it would have hit ABC perfect and stopped there, I'd have been much more inclined to go long. But since it broke, it's going deeper. Whoops, I should do this right. It's really right here. Since it blew through there, then you know what? This ain't going to be your ordinary ABC. It's likely to probe lower. Again, though, I talk about being prepared, and as long as you're prepared, you're going to be okay. Worst case is you're going to get stopped out. All right. So the next day we don't adjust anything. It just sits there. and then I get a little doji. What I could do is tighten it down to there. You see how I did that, Robin?
Yep.
Okay.
Yep.
I'm always looking for that dang capitulation candle. And baby, it's always in the bag of tricks. And here she comes. Being patient, those guys who were holding out, they finally capitulated. The first thing I do is lower my stop down, but you can see what happened. I'm almost within a fraction of a point at my target already on that red candle, aren't I?
Right.
So essentially I'm at a decision point after that red candle, and now the other concern is I'm getting a long ways away from my 9-day moving average, aren't I, Dennis?
Absolutely.
And if I look above,
Time this.
I'm buried oversold, aren't I?
Yeah.
Pardon me. And I've got this little thing down here saying broke symmetry, look for a higher low anyway. Okay?
Yeah.
So because I wrote that note, and because we're oversold, this time I want to be on the lookout, and I not only want to be on the lookout for us. Would you mute, Rob? I not only want to be on the lookout for a stop, I want to be on the lookout for a reversal long because of what I've said here, right?
Yeah.
All right. So this day I've got a solid red candle. I'll say 50% is about there. If it would have reversed up the next day, I'd cover short and go long, and my stop would go right there. Everybody following?
Mm-hmm.
And my initial target would be the 9-day moving average. Okay?
Yep.
Now, this is the last thing. I want to get through to this. This is very important, okay? I'm always looking to draw patterns. So I see this, and I see this.
Okay, that's a very steep wedge.
That's right. It's not an ideal wedge. It's a steep wedge. In fact, you're going to see. We're going to go to the right here in a sec, okay? And on this wedge, I've only got 2 touches, don't I, guys?
Yep.
Okay. So is it an ideal wedge? And by the way, I also want in an ideal wedge, I'd prefer to have this touch, this 5th touch. I'd like to have divergence. And as you can see down here, I don't have any divergence, do I? So I've got a real steep wedge, don't I? Okay?
Mm-hmm.
Not the ideal 5-point touch. This is a 3-point touch, really, wedge, and it's really not even a wedge. It's a waterfall. In stock terms, it's not so much a wedge. It's a wedge pattern, but for us, we'd rather see a more gradual one. So I'm over to the right now. You guys see this?
Yep.
Okay. You see this wedge inside this wedge? Doesn't this wedge look identical to this one? Look, let me get rid of this.
Yep.
Do you see the dashes over here to the right? Let's get rid of this. And don't imagine that it just, doesn't this look almost identical to that?
Amazing.
Really, Robin, you
Yeah.
see that, right? And do you guys see
Yeah.
okay,
Yeah.
look at all this white space here. I don't have any, all I've got is a touch here and a touch here. I don't have any touches here. Okay? So real steep. Now, this is an important point and concept. Okay? All right? I'm not going to get blindsided that this can't work, but I'm going to be a nervous long here without evidence. I'm going to take the trade. I can take this trade too. But as I stated, my initial target is the 9-day moving average, and I'm going to give you another target. You see this wedge right here? You see this?
Mm-hmm.
So I'm drawing in a target off of this, and this is my target, and it's only to that distance, which is about the 9 anyway. You see that? Do you see that, guys? Okay, so
Absolutely.
that's my target okay, my conservative target. Now I'm going to go one step better, and I'm going to show you symmetry. Remember how this keeps coming back. I showed you the little symmetry on the move down, on this move up, right? Right? Okay.
Yeah.
So when we look, this right here is the largest rally in the downtrend, right?
Yeah.
Okay, so I'll change that to black. Whoops, I'm going to change this to black. All right? So this is the largest rally in the downtrend. So I want to make note of that ahead of time and say, if price comes above, and I'm going to change symmetry to keep it consistent with the last time. If price comes above this blue, then it breaks symmetry, okay? Okay?
Yeah.
All right? So now this is very important. I can set these parameters up ahead of time, right? Okay?
Yeah.
So in simplistic terms, I'm going to get rid of this stupid wedge thing, okay? All right? I see us down here at oversold, but man, there's no divergence, okay? It's a real steep thing. It kind of looks like this, and it certainly looks like that over here. In order for me to have confidence that this is going to rally strongly, I need to see it power out, not only get to the 9, I need to see it break that blue line. Got it? Everybody following me?
Yeah.
Because
Yeah.
if it breaks that blue line, and I'm not talking by 1 or 2 points, but if it breaks it and makes it to the 20, that would be enough. It tells me that it's broken symmetry. And guys, what it would do is, instead of being a channel down, it'll break the channel because I've shown you how. So this would be the start of a potential channel. And you see how it lines up with my symmetry right there?
Mm-hmm.
So in essence, to make it simple for you guys who don't understand it, I'm breaking out of the channel.
Right.
Right? So this right here would serve that oh my God, without any divergence, if it goes through here, it's over. It's done. It was just an ABC. It's done. And by the way, I shouldn't be totally surprised because I'm looking for a higher low and I'm looking for a corrective move anyway. All right? But
And that correction was 62% too.
It is. Is that what it was? You calculated it? That's another
Yeah, I
thing.
got it.
You can put those on there as well. Okay. But I don't even need fibs. I start getting overly complicated. Okay.
Okay.
I just need to know, okay, about this. Okay.
Yep.
If you want to use them as guides and that, fine. But I just know if I get over this point clearly and the 20-day is enough, I know that, oh my God, I'm in. And by the way, since this is my first higher low, it's a swing trade entry. That's why I don't want to miss it. But if I don't fire out and get solid white candles and blow through this, here's what I'm weary of. That I pop up to the 9 and I get this chop slop and it's not ready, and all it's going to do is reset and come back down. So this area right here is very important, and I need to see price go through. So let's see how I would trade it and how you should trade it just based upon what I'm saying. We've got our markers in place so we can get rid of those. Okay? We've got our markers in place, nice and clean chart. We can see that. All right. The next day I get this inverted hammer here. That tells me that downside momentum is waning. So I'm going to adjust my parameters and I'm going to risk that amount right there. Got it, guys?
Yeah.
And my first target is right there at the 9. The 50 happens to be there and the measured move. My symmetry's there. Okay. Well, the next day, watch. The next day I get a beautiful up candle, don't I? Okay.
Yeah.
So I'm going to move my stop immediately to 50%. You see how simple this is? So
Yeah.
I'm at break even or a small profit, and this is the first decision point. If I was trading futures and I made that in one day, hell, I'd take some profits. That's a hell of a move. Okay? If I'm trading a leverage instrument, I might want to take some profits. Okay? But at a minimum, I'll change that to purple. I'm raising my stop to here. And because this is a potential higher low, I don't want to give up on this thing too quick, okay? Let's give it a little room, okay? Let's see if it can get through this mess. Because, guys, guess what? If it comes down and stops me out, I made a little money, and I'm going to be looking for that fifth touch anyway, okay? I'm going to get back in. So I want to stress that I want to give this one a little bit of room, okay? So the next day, I get this little inverted hammer. So if I'm nervous, here's how I would do it. And I would be a little concerned there. I would put half there, and I'd keep half there. Now I feel pretty good, right?
Yep.
Okay.
Yeah.
So if I get stopped out of here, I made probably 20 points, and here I maybe make 5 points or so.
Yeah.
All right.
Mm-hmm.
And bottom line is, this is an inflection point. It's either going to crap like this stuff does, or it's going to get going. It's encouraging yet. I don't have a lot of dojis. The next day gives me my answer and then some. It absolutely blows out, doesn't it? Okay? It absolutely blows through symmetry. So you know what it tells me? This puppy is over, and guess what I can do again? I broke symmetry, and I can shift it out to the right. It's unbelievable. Okay? I broke symmetry, and on the next pullback, I can look for a higher low again.
Jeez. Yep.
All right? And I see how early I can do that? All right, so now we're going to manage the trade. Okay? We can get rid of symmetry. It's over with. We can get rid of the measured move. It's over with. We're going to raise our stop immediately to 50% of that candle. Okay? Now, if I was doing my job properly, I would also identify some potential resistance areas.
Right.
And somewhere around in here, you see this? I've got some resistance. If I do it properly, you see this? So I've got a trend line, and that's where it stopped that day. I don't see any other reason why it would stop there other than this. Do you? And then I take this, and so I say, I always got to look to the left. Okay? You see how I have this? So I'm saying the first thing it's got to do is deal with this mess on the left, right? Right?
Yeah.
Okay. So again, I'm in pretty good. I'm up here at 50%. And again, if it moved this far in 3 days to a trend line support, of course, this would be a decision point for anybody to take some profits. I said after any huge candle, you know, you may want to take some profits there. I know it's a swing entry, but to take partial off, and I'm already overbought on my RSI 5. See this?
Mm-hmm.
Okay. Taking part off. Wouldn't it be nice to say, you know what, if I took part off there, then I have no problem keeping my balance of my stop down there to begin with. Right?
Right.
Because remember, I made a lot of money. I'm in here at 1175, and up here I'm at 1245. I'm up at least 70 points, a little over 70 points. And Robin, I did it, Robin. This is 3 stinking days. Not 70 ticks, 70 points. So remember, I made 100+ points over here. Okay? And depending on how I traded it, I made another 20, 30. If you swung it, maybe you made 150, whatever. I made 60, 70 on the downside. On a couple of these trades, I made a ton on this trade. I'm up like 200+ points, and now I'm up another damn 270. I'm up 70.
Yeah.
You also had reverse divergence at the October high, Steve.
That's another. There's another thing right here, or at the October high. Okay.
Yeah.
All right. So now, okay, it's just a matter of managing the trade and letting the market tell you stuff. We know that we've got, a lot of consolidation here. Okay. All right. All right. Now, all right. We start seeing this chop around this, and this, okay, and boy, it's dealing with this damn 200-day moving average, and for some reason, it's a player, okay? And once I start to see three dojis in a row, It's starting to tell me, oh, this is getting a little tired. What I would do is probably, up in here, it starts shifting my stop up. You see why I did it?
Yeah.
I made a higher high here so I can shift my stop up here a little bit. All right? And somewhere in this vicinity, okay, whether you took some off or you waited to get stopped out, I do see a kind of a solid white candle here. I'm not going to say you're going to be proficient. Let's just say we end up getting stopped out here. Okay?
Yep.
All right?
That's pretty good.
All right. You know what? That's okay. We still made money. I got overbought. Wouldn't it be nice if this damn thing would unwind a little bit anyway? Okay? So let's just play this out. Okay? Remember this. I'm still looking for a higher low, aren't I?
Yep.
I put that down there. All right, so we start selling down. Okay, boom, boom, boom. Okay, again, maybe you're saying that all we'll get is a little pullback, but do you see during this entire rally up to here, do you know that my biggest pullback was only that distance? Right there.
Oh, yeah.
So this pullback there broke symmetry. So it's telling me that this immediate uptrend, it's over. This is the only little pullback. This is bigger. So it's over. It's a little bigger pullback. Now, conceptually, what I'm looking for is at least some type of A, B, C, not just a one candle pullback, because the market, it wants to A, B, C. This rallied 1, 2, 3, 4, 5, 6, 7, 8 days, 8 or 9 days. Is a one day just enough? Nah, not likely. Now, if you're just one of these people that never wants to miss it, and you see a red candle, you can take it with a stop there, okay? You would go long right there, okay? But it ain't going to last too long, and you end up getting stopped out. But you could still do that. If you don't want to miss anything, it's there. But you see, after that one-day candle right there, I'm not oversold yet. I'm just at neutral.
Yeah.
But again, in case you don't want to miss it, you want to take it, go ahead. And then you get this big white candle like this, all you would do, you wouldn't lose much, because you know what you would do? You'd shift your stop right up to 50% of it. Do you see how I did that, guys?
Yep. Yep.
So I had an entry at 50% there, an original stop there. I got a white candle, so I can shift it right up. If it's going to go, it shouldn't come back in it. Well, it said, Steve, you idiot, it's not ready. So maybe I took a couple point loss. That's all. All right. So you want to come down again, so be it. You come down. And now and this is what I always encourage people to do. Okay, we're going to come down.
Another wedge.
And yeah, it's amazing how these patterns repeat, repeat, repeat. So let's get rid of a bunch of this stuff. And let's draw in. And we're almost done. Okay, because the others is just repeating. I want to show you one more thing. But it's a steepy, but it's a little wedge. And this one, I get one touch here. I end up getting a second touch there. And I get 3 pushes down. That's really nice, okay? And there's my first push, and there's my second push. Actually, I got it too steep. It's like that. Okay? All right. So anyway, the real question would be here on this. You see this red candle right here? Because I've already done a little ABC. This one gets my attention. Let's see how, we're down here. And I'm already towards oversold. You see that, guys?
Mm-hmm.
So I have no problem right here, because I hate to miss. I have no problem putting a little marker right there on that red candle.
Yep.
Okay?
Really nice tight stop.
Yeah, because I can put a stinking stop
Right there.
right there.
Right at the bottom.
I mean,
Yep.
I'm risking, what, 7 points?
Is it that much?
Yeah, I mean, I'm always conservative, Rob. And by the way,
Yep.
I'm risking 7 points to make 110.
Yeah.
That's
Yeah.
my first target. Do you see? So Do I mind once in a while getting stopped out when I can make a 10-to-1 ratio? Okay, so
Yeah, no,
let's just
of
say
course,
we
yeah.
did it. Let's just say we did it. It's okay because I would have done it, all right? But you know that if it's really ready to go, I've said that it should really fire out, right? All right.
Right.
And,
Yeah.
you know, the first ding candle here, it starts out kind of promising. She gets a little fire, but then at the end of the day, it gives it back, and I get a little inverted hammer. Well, remember, I'm down here. I'm not stopped out yet. I'm willing to give it, hey, I'm risking 7 stinking points. Maybe it'll be the next day. Well, she goes a little higher, but the dang thing peters out again. You know what should kind of go in your back of your mind already? Uh-oh. She ain't firing too much. It better get its ass going, pardon my French, okay? The next day, well, guess what happens? We're wrong,
Yeah.
and instead it comes down.
Yeah.
Oh, but see, instead of panicking and saying, oh, God, I lost 7 points, you should be happy because it gives you another nice red candle, okay? And it completes this pattern. I get a little 3 push. And I get a little, I don't get any divergence per se, but I get a little further oversold. All right. Again, this is why I focus in on price first and foremost. So I've got now a nice little wedgie. I really do. I've got 5 little points. And if I
lower high.
hey, by the way, if you put
Higher
fibs on,
low.
if I put little fibs on here, you want to see what it is?
50%? Yeah.
It's almost a 618.
Yeah.
In fact, it's going to be pretty dang close to a
It's at
618.
least 618. Yeah.
Look at that. It's to the penny a 618. That's what it is. Well, not to the penny, but let's say $1 or $2. That's close enough. Anybody got to take a break?
Well,
Because we're going to, this is the fun part, and then we're, you know, the other's just repeating the same thing. All right? All right? Someone's phone's going
I'll
off.
take a little break.
Okay.
Yeah, not mine. I need to refill my drink.
Go ahead. Let's take a 2-minute break, and we're going to wrap it up in 5 minutes. Let's take a 2-minute break.
Okay.
Is 2 minutes long enough?
hey, we can,
3.
I mean, I'm willing to go.
3 minutes. Robin wants 3 minutes. Let's do 3 minutes. We'll be back at 20 of the hour.
Perfect.
Got it? See you
Yeah.
then.
Steve, you there?
Was someone still here?
Yeah, it's me.
Hi,
I'm
Matt.
still here too.
If I get up and go, then I
You see that low up there you have where you start drawing your wedge up on
this
March?
low or this
No,
low?
March low.
The March way over here. Oh, this one?
March. You're in April.
This is March. Oh, that's
Yeah.
April. This low?
Yeah, that low.
Yep.
So you broke well.
No, I didn't. I didn't.
No, you didn't break a symmetry low. But
Watch.
anyway, you have reverse divergence there.
Oh, okay.
So
Yep.
that's another
And
thing. You can see it in your RSI too.
Okay. And
The RSI makes a lower low than it did on the other lows.
there's my trigger right there.
Right, but it's not your reverse divergence is your trigger, but when you see it, it's just like, oh, okay, it's just another.
No, that helps support it. And by the way, the fact that it held symmetry.
Yeah.
By the way, you see this pull? You guys see this pullback right here?
Yeah.
All I did was double
I'm
it
back.
and pull it right there.
Yeah.
All right. So anyway, we're back. All right. So guys, I just added a few lines in here for guides. I think it's proper. Okay, to just kind of see a pattern. I put some under here. This one's really meaningless now. All right. So remember, we triggered here, right? That was the bottom of that wedge, and immediately I start see, now I know I'm right, because Robin, that's these little two crappy things. Look at this thing. Okay? So what do? I immediately move my stop up to 50%, and now guess what, guys? I'm going to start setting some targets, because my swing is down here, my first leg. So watch me set targets, and I'll set targets in green here like this. So my first little leg was right here. So I'm going to take that, and I'm going to put it right there. Whoops. This is my first target. Am I all the way there? All right. So my first target, come on, baby, is going to be right there. Okay, guys, got it?
Yep.
All right, now I'm going to set, whoops, I deleted it once I set the target. This line is target number 1. Got it?
That's
Now
fine.
Now I want to go back to here. All right. I'm going to set target number 2 here. I want to be precise. So there's target number 2. Got it? And here's target number 3. I have the targets in already. Got it? Everybody see them?
Yep.
And I draw big lines, okay, up there to identify targets. So, and I can do that off of these prior moves ahead of time. All right?
Oh.
They're just guides, okay, but it's nice to know where some symmetry may lie, and I'm just literally taking the prior moves. Got it?
Yeah.
Okay. Anybody questions on that?
Robin, you were gone,
Steve,
but I was pointing out the reverse divergence form in March there, just as a little guy.
Yeah, we're going to get up to there.
yeah.
We're going to get up to there because we're going to fly through the rest of this. Go ahead,
Your
Rob.
stochastics also has it, Steve. The stochastics is really neat because if you look at it, the bottom, you're 14. It's hard to see it because your chart's big.
Yeah, I know. I can go all the way down there and show you.
Just take a look at it.
Yeah, look at it.
Let me know when you pull it down.
But again, I'm going to trigger off the candle, so I don't really care.
I know, but like actually your stochastics would have kept you in right to that first red candle, right after your arrow. It's perfect.
Well, I'm going to sell here and buy here. As I'm going to show you, and I'm going to tell you.
But
I'm going to tell you why.
March, April time.
Yeah.
Okay.
Go
ahead.
My question, Steve, had to do with, okay, the smaller the symmetry, the smaller measurement that you had,
This
from
one?
the low of
This
the
one
11,
right here?
Yeah,
Yeah?
that one.
Mhm.
Would it be inappropriate? Would it be inappropriate to do? Okay, so you have a measured move there from your entry point,
This one right here.
right?
Yeah.
And it goes up to that blue line, the first blue line. Okay, could you?
You're saying take it here or something?
Yeah, I'm wondering, would it be appropriate? You see that red candle that comes back to the 9?
Yeah, it's a nice, right here, it's a break and a back test of this line.
Yeah.
So what,
And
you want a
then
measured
have
move
another
off of there?
Measured move.
Yeah, you could put another, you can have another measured move, and that would be a range.
Okay.
That would give you a range up there, and you can see where it
Okay.
struggles.
Yep.
All right.
Okay.
This to me is a pretty sloppy triangle. It doesn't have this. You see how steep this is? It
Yeah.
doesn't have the right look. This top one
Yeah.
does. This is the type of look I'm looking for. This is steep. Okay, so I don't really like
Yeah.
it. All right, but what it's really useful, so absolutely you can do this, Robin. It's perfect to do this because that gives you, I like to have a range of target.
Yeah.
All
Yeah.
right? And whether it's that or that, who gives a crap about 10 points when you're making 150?
Yeah.
You know what I mean?
Exactly.
You know what I mean? And by the way, this is useful because it breaks out of here in back tests anyway. All right, so
Yeah.
anyway, this is where the wave structure starts coming into play because I've got a big A or 1 and I've got a B or 2, and then I get a little subdivision, okay, where I start subdividing 1, 2, 3, 4, 5 of 3, 4, 5, and complete. Anyway, that's how it goes. But let's just move this up, okay? And literally now, because of this hard lifting, guys, that we did on these, finally, what happens here? All my moving averages come together.
Right.
For the first time, you see how they got all spaced out? So this really becomes a pristine entry. And when I'm in these third waves, it really just gets so smooth. And they start just riding the 9 up. And every time I make a higher high, okay, every time I make this will be my stop. Every time I make a higher high, so I can move my stop up. And here, okay, I'm still at my stop here, but once I break above this to here, then I can move my stop up to here. So once I break above this resistance area, I can move my stop up.
And then just start trailing it up with
And
the 9.
what did I say all the way? I want to just kind of stay below the 9. So then, I make a higher high here. Well, it's got to go up. And then I take out this high. So let's just kind of shift it up, keep it under the 9. Remember, we're looking for at least this.
Yep.
Okay, that's my minimum target. So let's be patient and just trail it under there. And then I make finally another higher high. I can boost it up here. Okay, I want to stay underneath that 9. Okay, and then finally it hits target number 1. Okay, now what I want to do is when it hits target number 1, I want to look at the evidence here. Okay, let's look above. I'm overbought. My God, I'm up here. I'm finally overbought on the RSI 14. But do I have any divergence?
No.
Not a smidgen, do I? So I'm just overbought. When I'm sky high overbought and I've hit a target, I'm probably going to get some shake of some sort. Okay, so instead of maybe the 9, maybe it wants to come back and at least test the 20. It hasn't tested the damn 20 in weeks. Okay, so here is decision point number 1. But would I be just like totally panicking out of all of my position here if I'm a swing trader? No, I don't see a lot of evidence. But again, taking some profits here is certainly prudent. Okay, this particular time, okay, I get a pullback. All right, and I don't get a great red candle on this pullback. Sometimes it happens. I get a little hammer candlestick. If for some reason I sold some, maybe I draw in a little pattern or something. I can't get anything too much. I guess over time I form this little continuation pattern. You see it right here?
Yep.
Okay.
Yeah, you got a wedge.
All right.
All right.
So I get a little teeny, a pennant. Let me change it to
pennant,
blue.
yeah.
You get a little pennant there. And again, the fact that I've got no divergence tells me that I'm at least likely to somehow get up to this trend. By the way, I'm just out of curious. I've never done this in my tutorials. I want to see this distance right here for once and see what it gives me. I don't really love this pennant, I gotta be honest with you. It doesn't give me really anything. We'll stick to my original things. All right, so I don't like that shape. It's just far ranging. It's just a trend line here it breaks through. This would just be a little buy trigger right through here. That's not a pattern. Again, fib pattern. So anyway, we're up into this area. Okay, all right. And if you take some profits there, so be it. Then you can keep your stop down here. And then if it goes back above here, now I can raise my stop up to here, right? Okay?
Yep.
All right, so it starts powering up. I'd rather see some type of ending pattern. Usually I get some wedges. And you see even here on this push that goes into this target range, Robin identified this target, I had this target. It's amazing, okay? Gets up here, and you know what it forms? If we get rid of that,
Yeah.
1, 2, 3. Gives me a little rising wedge. And look above. This time I've got divergence.
Yep.
And I've even got it here. So this is certainly one time where I'd want to be buttoning up my stops. So as I'm pushing up, as I'm pushing up here, I'm up here with my stop. But once I start recognizing chop with divergence, okay, and I'm up here by the upper Bollinger Band, honestly, guys, I get a white candle right there. You see it?
Mm-hmm.
Let's get rid of these arrows. You see this white candle right there finally? You know, taking back 50% of that, I'd stop out. And then I'd go back to my symmetry. You see this symmetry right here?
Yeah.
Okay, so I've got two symmetries. Okay, I've got this symmetry and this trend right here. This is a symmetry. You see this?
Mm-hmm.
Frickin' amazing.
It's
Okay.
amazing.
All right, now, and this, I'm not making this up. This is what actually happened. Okay, and then I've got a, whoops, I need to keep that around there. Then I've got another larger symmetry target off of this move. You see it?
Okay.
So I could
Gotcha,
I could use that as a guide. You'll be surprised, okay, on this pull on this pull back here.
Yeah.
How
It's nutty.
it absolutely hits that and bounces off.
It's nutty.
All right, but anyway, so this one here, I would have, and I know Robin would have sold and everything else, but look at this beautiful, and Matt talked about the reverse by divergent. Hey, by the way, on this strong uptrend, you see how the RSI 5 is only resetting to 50?
Yeah.
Yep.
That's a strong trend,
Yep.
right? All right. So anyway,
Yeah.
we get up here. Let's get rid of this stuff. Okay? And we take our profit somewhere up here. Okay? And we know ahead of time we've got a little symmetry guide here. Okay? So, you know what? I literally would put like a little symmetry marker in here ahead of time. Okay?
Yep.
And again, am I just going to buy at symmetry? No. I'm going to wait for a trigger so I get a nice red candle again, right? And I'm saying the hell with it. If it takes back 50% of that, maybe we're going to go for the gusto and go for my final target. Am I just going to hold
And it
out
also,
for it? Go ahead, Rob.
I was going to say your RSI also crashed down.
Yes,
to
and that's
oversold.
exactly, it's so beautiful. It comes all the way down to oversold.
Yeah.
So my God, and by the way, when oscillators unwind really fast, that's positive.
Yeah.
Okay? As long as price will reverse. So here we go. And kaboom, we sold, and by the way, we sold off for, the peak was actually there. 1, 2, 3, 4 days. I'd like to see us get back up there 4 or 5 days. 1, 2, 3, 4, 5. Okay? Was struggling there a little bit, but it took back in time. Okay? And, you know, once we plow through here and I get a big candle, you see how my stop immediately comes right up to 50% of that candle? I would have been raising my stop a little bit here, but once I get here, it's immediately up to here. Okay? And now I've got this target up here, guys, and honestly, you know, you get this close even on push number 1, push number 2. You don't have to squeeze out for every dang dime, okay? You get up here even to target 1, okay? You know what?
I got a yacht to buy, Steve.
That's exactly right. Book them. Do you guys realize how much money this was on this target?
Yeah.
Okay.
Oh, yeah. If you're
total,
trading S&P futures, you're somewhere around
I mean, Jesus,
20
I mean,
20,000,
this is 200.
somewhere in there.
This is 220
Yeah.
points from here.
Yeah,
And we took
that's 10 grand.
we
That's
were
10 grand.
we decided, we don't want to be pigs, so we took some profits, okay, at what, instead of 220, maybe 180 or 170, whatever, okay. And then we got back in for it, but we got back in for a trade. And then let's look at this. I get the opposite of these patterns, and look at this nice rising wedge pattern. Look at this divergence, okay?
Yep.
All right, it's right here on this point. Again, you could try to take the short off of this white candle here just to be protective, just not to miss it, but you'd get stopped out. And then what you hope for is really a nice completed pattern. And then you see my target. Okay, so my trigger is there. You see how tight my stop goes? It's literally less than 10 points. My measured move out of this pattern is this distance. It's small, which pretty much equates to symmetry. You see that?
Yeah.
So symmetry, and then I look at my prior pullback. You see this pullback? You see that? So I set that.
Yep.
And by the way, that's where I mean, is it amazing? It like came right to it. And then in the bigger picture, I look for this target.
Oh, yeah. Yep.
Oh, yeah.
Holy cow.
And if I draw it across, well, I don't want to slant it. It's pretty close. Not bad.
Oh, yeah.
I mean, within 5 points. Are you guys going to complain?
You didn't get there.
Yeah. But I got a red candle, and look at how oversold I got.
Yep,
Okay.
yep.
Am I going to be frickin' worried? Look at that thing buried. All right, but anyway, it's just more of rinse, repeat. And, here's the ideal setup after I come down and get look at this divergence here, okay? And this is a beautiful wedge. Let's get rid of this stuff.
Gorgeous. Yeah.
It is just gorgeous. Okay, but I don't want to buy at the wedge. My trigger, just so you guys know, is I start out with a big red candle. So it's 50% of that, right?
Yeah.
And then I get a little spinning top, so I drag it all the way down there so that I drag it right there. So I'm going to risk that. And instead of waiting all the time, I'm going to get in way down here.
The nice tight stop.
Okay. Yeah, and a nice tight stop. And guess what? I'm way too far away from the 9. So if I can get in here, I should pop at least to the 9 or 20. And with a divergent pattern, I have a measured move anyway. That measured move is this distance right here. So I'm risking, 15, 20 to make 60. To make 60.
Not bad.
Not bad. So, and it's kind of crap. But then I end up coming up here and I form a little pennant. And look at my measured move, guys, on the thing. You see how I did it? So I took the measured move. All right. And you see how I do it conservatively first? So you see where I do it right here?
Yeah.
Okay, and I take it up there. I take it conservative, or we could just say and ignore that and say this is the leg right here. So that's where we popped up to, and we just take that. I mean, that's pretty damn good. So that's my bull flag, and a bull flag marks basically like a halfway point, and there it is. But the more aggressive move would be out of the flag. And you see, sometimes we don't get all the way to the aggressive move. And why isn't it better to be a little conservative?
Yep.
Yeah,
Okay.
yeah. That's why I'd asked earlier. If you, how, like, come inside, because usually if I, if my target is some, area or something, it's not a line in the sand, it's an area. It's
That's exactly right, Robin.
it's like it's your rectangular box over there. You can't You can't look for it to be.
This is going to go white. No, it didn't. All right, so we're not going to spend any more time on that, but let's just look at what happened since November. So that was 2011 to 2012, right?
Right.
Yeah.
So you say, oh, Steve only picked the time that it works. All right, let's go to 2012 in November to current, okay? And we're not going to spend a lot of time on this. I'm going to go so fast, okay? Look at this. I get a falling wedge right down here, right?
Yep.
See my trigger? Boom. Okay. Now, we rally up, and look at this. I get overbought with divergence. Reasonable place to take some profits, right?
Short. Yep.
All right. So
short.
So I come down and I make an oversold low, and look at that. There's another. Dang it! Those red candles show up all the time at the bottom. Okay. And I'm looking for a solid. So my trigger is right there, right, with a tight stop. Okay. And then, up and away, and then, we hit here, and look at this. I get another divergent high, pull back, and I get another red candle. And look at, I get oversold. Okay? All right, but watch this symmetry. So my first pullback is this distance, right?
Right.
Right there. Okay. I want to do this here. Okay, so that's my first pullback. So let's put this here, right there. It didn't break symmetry. It was actually a little shallower, but pretty close, right? Again, you're not going to have it absolutely perfect. Look at this one. That's not a clean break in symmetry. I mean, that's a rounding error. Okay, right? So when symmetry is holding, and I get a rally back up, I'm saying to myself, we're going to new. I'm going to take out the highs. Okay.
Right.
It's only when I break symmetry that I don't think I'm going to take out the highs. Okay.
Right. Right.
All right. And guys, I don't want a 2-point break in symmetry. Like I said, now we're up at 1,500. Let's at least get 10 points. Jeez. Okay. All right. Anyway, I come down towards oversold here, and there's a little positive divergence here again. All right. And then finally I get up into nosebleed territory. Now, see this pullback right here? I go all the way down to here. Is that a break in symmetry?
Yep.
Yes. So what should I look for?
So you're looking.
So it tells me that this immediate uptrend has run its course, and I should look for a lower high. Did I get a lower high? Did I get a lower high? Yes, I did.
Beautiful.
And my measured move is
the same. Wow.
A little guide is not bad.
Good enough.
All right, now, and by the way, I'm back to oversold. I've got another red candle. Let's get long, okay? And as long as I break symmetry, which is just a leg like this, I don't need to, this is just the legs themselves. And by the way, you see how this is a little ABC here?
Yeah.
It's just amazing, huh? All right, so as long as I break this distance right there, it should be over, and I should go up to new highs again. I should at least take out this high. And there I go. And then look at this damn divergent high. I talked about it. And you see my big white candle up here?
Yep.
That's my trigger. Okay, that's my trigger. It has to go below half of that. Well, the next day I get a doji so I can tighten it up. So I got a nice, teeny, tight son of a gun stop in. Okay? And it takes a while. It takes a while for this puppy to break down. It starts out slow, but then she lets go. Okay? All right? So I get a break and I get a lower high. So I get a break right?
Yep.
So here was the little, I don't really have, let's see if this is like a little pullback. You see how these pullbacks are almost identical? You see this one and this one?
Yep.
See it?
Mhm.
So it doesn't
Yeah.
take much to break symmetry, right? And it's broken, and then kapow. Someone could consider that a lower high off of a little thing, but there's a clear lower high, and then we come down. And then I make a divergent bottom, and I get a big red candle again. So we'll buy there. If it gets through there, let's get up there. Well, oh, one thing I want to address. You guys see there's a gap here? So I
Yep.
want to,
Yep.
on this candle range, I want to add in the gap. Okay?
Okay.
So I want to be more conservative, okay, with those, just so you know.
Oh, okay.
Okay.
For your 50% measure,
Right.
you mean?
All right? Yeah.
Okay.
I just want to be a little conservative type of thing. All right? So, you know, I don't get it. So then the next day I get a little tighter. So there's my range right there. And it's either going to go or not. It starts out kind of sluggish here, okay? And until I take out this high here and this high, I can't really be doing too much with my stop. And then finally I get enough here to bump that stop up a little bit, okay?
Yeah.
You know, and then up and away, and here we go to a sky high overbought, and this is where I shorted the other day right there.
Yep.
You see, here's where it started at, Dennis, right?
Uh-huh.
And then the next day I got a little doji, so I just tighten it up, and then you see my little stop?
Perfect.
I like it when it sets up that day.
See, that's
Just
what I
that day
want.
in between.
I agree. I don't want it.
Yeah.
I don't want it to reverse the
Your
next day.
stop is- yeah, your stop is just so itty bitty.
It's just so tight.
Yep.
All right,
Yep.
and you know your conservative target is down to the 9. It fights there for a while, and because it got outside the Bollinger Band, it's likely to come to the 20. And you know we've been fighting around in there for a while. Okay, are we going to get a little continuation type pattern here, or what's going on?
We got a sandwich forming.
You know, yeah, we might come up here, okay, and get a lower high or something. I'm not too gung-ho about being overly bullish here, especially in the weekly charts. They're so just awful, okay?
Okay.
I'm pretty, put it this way, every time we latch up in this, and this, the buy areas I'm getting tighter and tighter at, okay? So really, this is just crap noise in the middle now, and we could have been trailing our stop down here. We
Show
could
the
have
weekly chart,
taken
Steve.
some profit. I showed it to Robin, so let's look at that weekly chart, guys. Look at that weekly chart. Whoops. Hang on. Dennis, look at this weekly chart on the S&P. Would you be gaga? Would you be
Dennis
gaga
wants
up
to buy
here?
it.
That's, yeah. Yeah. I mean, that's beautiful.
So would you deploy? Would you deploy all
Let's
your
go shopping,
401?
right?
Yeah. Would you deploy all your 401k money up into here?
Yes, pulling short.
Yeah,
We've
I
had
was gonna
members
say,
tell us that.
I've had members
I'm
telling
gonna
me
have
they're.
my garage sale.
That's right. They're looking to deploy some capital up here. I go, and oh, don't worry, I'm long term. Oh, you're long term. Okay, so if we go down 500, 600 points, how are you going to feel? So if I put fibs on this entire advance, okay, is it not reasonable to come down here?
Oh, yeah.
Hell yeah, it is. So that's 700 points.
Yep.
And by the way, that's the bullish view, right? Somewhere in here, 50 to 618. Now, maybe don't get me wrong, we can certainly squeeze high. Maybe we correct out of here,
Mm-hmm.
like down
Right.
into here or something, and have a last hurrah. That's fine because that would unwind these oscillators, okay? But in the bigger picture, I ain't touching this with long-term funds, okay?
Okay.
Yeah, yeah.
In
We
fact,
actually have members who tell us that.
yeah. Exactly. And then you know what they'll be telling me, Dennis? I'm now down 30, 40%. What do I do? Well, didn't you listen to me up here? That's what they'll ask Matt how often it happens.
That's nuts.
All right. By the way, on the weekly, you think symmetry doesn't work, so I'm over here in 2009 real quick. Here's the first pullback, right?
Yeah.
Okay.
Yep.
All right. Let's just push it up to there.
That's nuts.
Unbelievable. And I get a top. And by the way, once I break symmetry on the weekly,
Yep.
I go a little lower and I get a lower high.
Yep.
Yep.
All right. By the way, guys, and I was telling this to Robin, okay, do you know since 2011 right here is, let me get rid of these fibs. Do you know that this was the last lower high we've had, initial lower high we've had? We haven't had a lower high yet since then, all this time? So really see how this first breakdown occurs and then you get a lower, you see how this really starts firing off because by then the moving averages have flattened out. Okay?
Yep.
So now out of a wedge, a lot of times you'll get a sharp move down, but you'll get a lower high. That's where you really want to look at your swings, okay?
Right.
So you view this as a trade short, take the profits, let it bounce, and let it get a lower high. So in order to really do damage to the S&P, would it not be fair to say that we should break this type of symmetry? Right?
Yep.
Okay. And if we start breaking that, then, so if we break below, and I always want to look at the biggest one right about here. If we start breaking too much down here, you see this?
Yep.
Then we could get a lower, and then guess what? The party could be all over.
Yep.
Yeah.
All right.
Yeah, if you show that other chart you have with the time symmetries.
Oh yeah, I'll show you one. I'll show you one more, Rob. Okay. Now this is just a different thing that I do. Okay, with time. Anyway, Dennis, you think you got anything out of it?
Man, I got so much I can't speak.
How long have you been with us, by the way?
Mm-hmm.
I think about a year, maybe less.
Yeah, but I can tell you have some technical background. I mean, you're popping stuff out. There's no question about it.
Yeah, but I've never seen.
I was going to say, send me your email address.
I've never seen such a great presentation.
You've never seen what?
The symmetry and the concept of symmetry. I've never encountered that before. I mean, I have, but never in such a way that it actually makes sense.
It's powerful,
I believe
isn't
Steve
it?
has done about 180 of these in the last year and a half.
Can you believe I've done 180 one-on-ones like this, 3 hours a pop? We're almost 4 hours in.
2 to 3 a week.
I was going to say, we're well on our way to 4, Steve.
Yep. Well,
Yeah.
James, did you learn anything?
Oh, yeah, it did. Me and Matt have been talking about how we could potentially automate this process.
Isn't
pretty
it?
much the entire time in the background.
Isn't it powerful?
Yeah, I mean, I think
It's incredible.
Some of it is, I think, going to be hard to translate to a computer program, but I'm definitely kind of
Right.
Some of it we
trying
could
it.
do.
But
Yeah.
now you know, James, when some douche calls you to buy something and you look at it and you go, this ain't the time. At least you have a little foundation yourself. You know what I mean?
Yeah, I mean, I've picked up some other
Yeah.
stuff too, just writing all these strategies with Matt over the past 3 years. But
All right, let me just show you the weekly chart with my time boxes on it. God, I just don't like this market. Whew.
It just keeps going up.
Look at the 2000 or since the 2009 channel. You see how we're bumping our head against that upper thing?
Yep.
See that?
Yep. Wow.
All right,
Wow.
but this is the last thing we'll just look at. Okay, so here is a big chart with some time symmetry on it. All right, so this leg from here to here was in the shaded little blue was 103 weeks. That's exactly where we peaked out at 1729. And then I've got, a little extension here up there in case, we want to work up there. You guys see that?
Wow.
Yep.
Wow.
And by the way, these aren't only time. These boxes measure the move. So you can see we fell just
Right,
shy of a
sure.
1-to-1 relationship there in blue. So those are also a
Yeah.
1-to-1 relationship. Okay? So again, you know, with this type of pattern and this type of divergence, I'll let Robin buy that stuff.
Yeah.
Robin could be the, yeah.
That's what I said. I'm having a sale.
Robin, you
here,
can go to your broker and buy those. What are those funds we were talking about? Those where they have the fees, those loaded
Yeah,
funds.